So, yo, what's up for everyone on the YouTube replay? Hope you're having a great Tuesday. Let me start this off with a quick portfolio update. I mean, our Coca-Cola consolidated stock is up another 5% today. I mean, absolutely crazy. But it looks like the more tech stocks are falling. Data's down 10 nearly. Robinhood's down 3. Axon's down 3. Bitcoin's down 3. So yeah, it looks like a bit of the more volatile names. The high beta names are getting hurt. But yeah, here's our portfolio on the day, though. Here's some stocks that are green on the day. Our healthcare names, CPRX is up. I haven't looked at CPRX in so long. You know what? Maybe we'll do an analysis on this stock first. You know what? Let me remember that. So remind me, please. Actually, we'll look at that as the very first stock. But yeah, Disney's up on the day. Clear Secure's up. You know, they've been a beast recently. Check out their chart the past couple of days here. I mean, an absolute monster of a rally on earnings day. But yeah, that's our Webull portfolio. We also have our Moomoo account. This is known, if you look in the top left, as our buy and never sell portfolio. Because once we buy a stock in here, I legit try and never sell it. And the only stock that's green in here on the day is Coca-Cola Consolidated. This is the bottling company for Coca-Cola. And I mean, this chart looks phenomenal. I mean, this chart just looks insanely good on the weekly and the daily. New all-time high on this stock. If you're wondering what happened, why has the stock been on such a monster rally? The Coca-Cola main parent company sold all of its shares to the Coca-Cola Consolidated company. So they basically bought back. If we go to the shareholders right here, this actually will be gone soon. But if we go to the shareholders right here, it says the largest shareholder is the Coca-Cola company. They own 22% of all the shares. Well, actually, now the Coca-Cola Consolidated company bought back all the shares from them. So there's going to be 20% less shares that exist. That's going to monster the EPS rate up, and that's going to lower the PE ratio. Just great news there. Looks like Ferrari stock is doing good ever since it's let me remove some of these lines right here. But yeah, that's a nice little gap up on Ferrari today since their big downfall. We bought the dip on the news, literally the day and the day after of the news, and it's had a nice little recovery ever since. A lot of that is today. But check this out. We also have finally our Robinhood portfolio. If you look in the top left, it's called our dividend-only portfolio because every stock in here pays a dividend. As you can see, most of these are like dividend growth companies, you know, Meta, Google, CEG. Actually, Google is now our largest holding. If we go by total equity, our largest holding is now Google. We're at 5,500. CEGs were 52. And actually, McDonald's is up on the day. That's what I like about McDonald's. It's like a defensive name. Well, same with Coca-Cola. But yeah, they're up 2% on the day. United Rentals and Carlyle are slightly green as well. Pretty cool. Because if we go to the NASDAQ right here, actually, we've seen, whoa, the SPY just went green, or the S&P 500 just went green on the day. That's a new intraday high for the entire day, even since 12 a.m. this morning. It's the highest point ever in the S&P 500. So hey, maybe go check your portfolio. Maybe your portfolio is green if you own the S&P. So yeah, that's our oh yeah, I'll show you the year-to-date returns in a second. Here's our Roth IRA. We literally started our Roth IRA pretty much exactly a year ago. Hasn't done too good. We're only up 6% all time. We're trying to be more growthy in here. But it's so all over the place. I know we got so many holdings in here. So yeah, someone said just closed out of my Google holdings. I think that might be a mistake in the long run. As long as you buy back in, you're good. But I think Google is a never sell kind of stock. You know, even though it might actually, it's not even expensive. Google trades. I was looking yesterday, 32 forward PE. That's why I would trim Google. I wouldn't fully sell out of Google. I wouldn't sell out of Google with the intention to never buy back in. Google is a phenomenal never sell stock. I love their assets. YouTube, Android, Waymo, the cloud business is huge. Wiz Cybersecurity just got approved for that $30 billion acquisition, puts them in the top 10 cybersecurity players in the world. I mean, I love everything about Google, but I'm totally biased because it's now my largest holding in there. But yeah, let's look at some of y'all stocks. Open up a stock portfolio and I have $500. What do you suggest? Hey, that's awesome that you're just now starting investing. Not financial advice, of course, none of this is. If you're, I would just buy the actual S&P 500, ticker symbol SPY. It literally breaks your money up for you into the top companies you really want. And these are must-own names. And if you don't own them via the S&P 500, you got to own these individually. You know, Apple, Nvidia, Microsoft, Amazon, Google, Meta, Berkshire Hathaway. I would buy the S&P 500 as the backbone of your portfolio. Then I'd play around with some individual individual stocks that you know and love. If you like McDonald's or Meta apps or Google, like YouTube, buy those companies, the high quality ones. Of course, go do your own research on it. Make sure their financials are good. Like I wouldn't, just because you've heard of Ford, I wouldn't buy Ford. But all right, hey, what up, guys? Let's see. Aaron said Snowflake. Yeah, this is like Palantir's biggest competitor. Or they're not even competitor. They just do competitor. They do literally exactly the same thing Palantir does. They just lose a boatload of money. They're just now getting profitable. Let's see if AI has anything to say about this stock. Snowflake partner to transform tax data management. So yeah, it's a data company. What I love about them specifically is how growthy they are. Like, this is the best news. Check this out. The revenue's up 31, after grew 29, after grew 37, after grew 83, after grew 103. So they're on a streak of growth, and they're just continuing that. And 76% of all the revenue comes from the US. Check out how they're beating on expectations every quarter. That's the orange line. That's what analysts expect. And every quarter they beat on revenue. They beat on EPS this quarter. That's the great news that happened this quarter, because why I still wouldn't buy this stock, I'd probably go, it's tough to buy Palantir here though too, but they burn through a lot, 300-400 mil of net income a quarter. But analysts know and expected this. But this quarter specifically, they lost less net income than analysts expected by over 10%, which was phenomenal news. So as long as they keep narrowing these losses and just continue this already phenomenal growth rate of the sales, I think they're just going to continue to win. A bit of a tough valuation here again, since they lose money every quarter. There is no PE rate. The PE is infinite. Isaiah, what up, homie? Eli Lilly's about to hit 1K a share. Is it really? Yo, with the new... So basically Medicare, Medicaid, or whatever, the program now is going to add Eli Lilly's Zepbound, because that's their weight loss prescription, as a as part of the thing. You could buy, I think it was $149 a month. So for every person on Medicare and Medicaid, they get a discounted price of Zepbound, and I think Ozempic as well, for $149 a month. Still pretty expensive, but I guess if you're trying to lose weight, you just buy it for a couple months, or I don't think it's like Check this out though. This is a beast of a company. If we go to their revenue, the sales are up 53% year over year. So the sales are up 53, and the net income is up to, they made $5.6 billion of net income this quarter. That's after they paid $3 billion of taxes. I think that they didn't actually pay $3 billion of taxes. There was some other one-time adjustment. But check this out right here. What I love about Eli Lilly specifically is check out all the different prescriptions that they have here. Obviously, their main seller, Mounjaro, has been a phenomenal, like these year-over-year growth rates in the middle, like you can't make this up. The growth is just a monster. But the growth in the future coming for Zepbound is going to be crazy. This is their weight loss prescription. They started this in 2023, 175 mil of sales when it started. Now it's 2.3 billion, at 10x last quarter. So at this growth rate, what's it going to be this time next year? Who knows? And then of course they have all these other cool bets as well, like whatever Taltz is, that's up 26% year over year to a record. So anywho, beast of a company. I regret not owning this one. That I should have bought them. Dang it. But that's awesome, Isaiah. I'm so glad you own them. I want to get into Eli. Oh, you don't own Eli Lilly. Yeah, man, it's tough to buy it here. The risk to reward. The market cap's also huge. I just want individual stocks in my portfolio. I already have the S&P. Oh, that's great that you already have the S&P. Then yeah, I buy some individual stocks. So hey, what up, Mark? Oh, wait, I got to get to this stock first here. Remind me to get to Oscar Health in a minute here. Shopify. Ooh, so you know what? You know who owns Shopify? That's actually a big Cathie Wood stock. If you go to Cathie Wood's portfolio right here, I think it's her third or fourth largest holding. Yeah, her fourth largest holding is Shopify. This stock is another one I regret not owning, because I've had a Shopify store before. I know how it works. They just collect royalties. Even if you pay for their... If you don't pay for any subscription, you pay a lot more fees. But if you pay for their highest tier subscription, you still pay them 0.25% of every single sale, no matter what. So they just collect a lot of money every time the sale happens. But just check out their annual revenue. This is the part that justifies like the stock being at all-time highs. Every year, their revenue just hits a new record. That's incredible, the growth. And not just their top line, but the bottom line too, the FCF, which is free cash flow, printing free cash flow, a couple $100 million a quarter. They had a little one-time adjustment to their net income. They actually made quite a bit more. They didn't lose net income this quarter. It was like one acquisition related or something. But yeah, they're making a couple $100 million every quarter. Basically, the net income grew 44% year over year. Phenomenal balance sheet too. Literally monster balance sheet. Let's see if they're making interest. So they have $6.35 billion of cash. And if we go to their interest on hand, they made $81 million of interest on that just this quarter. That just adds money to your bottom line. That's great. Okay, that's Shopify. Okay. Will Zoetis ever turn around? I sure hope so. What up, Austin? Yeah, let's check out Zoetis right here. So, what's the multiple? They trade at 20 PE now. What was the bad news here? Actually, let's see if we can figure it out from the earnings hub. If video will even tell us this. Nope, they're not big enough. Okay, but they trade at 20 PE, so that means you're trading at 20 times net income. Yeah, so they sell parasiticides. Vaccine. This is for pets and like cattle, dermatology revenue, anti-infectants, pain and sedation. How's that growing? Well, that fell. Yikes! That fell 7% year over year. Anti-infectants grew 3. Dermatology grew 4. Vaccines grew 5. So it looks like it just slowing of the growth. Did that? So they slightly, that wasn't even that bad. They just slightly missed on revenue there. They beat on EPS and they beat on EBITDA. So it looks like their margins are standing strong. But yeah, look at this. When we look at their total revenue, again, part of this was because they actually sold off some of their lower margin subscriptions, which is another reason why the net. So look at this. If we go to which is why the margins are going up. But if you look at the revenue, it's only up 0.5% year over year. That doesn't really beat inflation. So basically flat year over year revenue growth. And but the net income. So the sales were only up 0.5, but the net income grew by 4. So that means even though the sales were basically flat, they were able to grow their margin a bit, which is good news. This is the best part. They make 700 mil of net income a quarter, 6 to 700 mil of net income a quarter. They pay a dividend. The dividend only cost 222 million. And since they have so much leftover money, they're deploying the rest of their cash in share buybacks. They legit do 3 to 400 million of share buybacks a quarter. That's why I'd actually happily buy the dip on Zoetis. You get a nice 1.6% yield, fair 20 PE. It probably should trade at 20 PE or maybe high teens if it's 0 point with that super slow sales growth, but they still print net income. What happened? Oh yeah, hey, by the way, this is a brokerage right here. Someone said, what are you using? What up, Timmy? So yeah, actually this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, that very first link there. So let's see here. Thoughts on PayPal? Yeah, hey, PayPal, I feel bad actually if you bought them before earnings, you're doing great, but sadly PayPal hasn't done so good. They're actually the same prices they were back in 2017. So the stock has been flat for almost a decade, unfortunately. And here's why. Well, actually, they had a great quarter this quarter, but the revenue, this quarter is finally out of that they need to get back to double-digit revenue growth. But yeah, if we look at the revenue before today, it was low single digits, 5, 1, 4, 5. So just low growth. And when you add inflation to that, but here's the best part: they still print money. PayPal makes $1 billion, well, more than that if you average it out. They make $1.25 billion of after-tax net income a quarter. Since they don't pay a dividend, well, actually they just started paying a dividend since they don't know what to do with their cash. But they legit plow all their extra money into share buybacks. If you look at the top, they do 1.5 billion of share buybacks a quarter. I mean, it's nuts. So here's what the share buybacks do for you and then why I look for share buyback companies. If we go to the net income is up by 23% year over year, but the net income per share, the EPS, is up by 31. Because again, the EPS growth rate and the EPS growth rate and the net income growth rate should always be the exact same. Only thing that changes is the share part of the ratio. So if a company dilutes you by a bunch, the EPS won't grow as much. But since they actually bought back their own stock, their EPS grows higher. So when the EPS grows artificially higher, that makes the PE ratio go artificially down, gives you more ownership in the company. And if they pay dividends, they don't have to pay dividends to the shares they retire. So in short, whenever a company does share buybacks, it forces the stock to go up. And one example of that has just been Coca-Cola consolidated. I kid you not, they announced this 2 days ago. Well, this is kind of why the stock is just just had a monster rally. You're not going to believe this. They bought back 22% of all the shares in one day. Okay. Oh, hey, what up, Crispy? Good to see you, homie. Can we check Joby? Okay, Joby, I'll be super quick, and then we'll look at AppLovin. I freaking love AppLovin. Oh, Nick, I'm so sorry. You give me a couple minutes, but we'll get to ASML. Don't worry. Remind me still. Oh, Meta. Yeah, no, Dimitri said Meta short term. Meta, I'm bullish Meta long term. they could be in some water for the next couple months here, but in the long run, Meta's a $800 to $1,000 stock, like for sure, for sure. Like on a conservative 30x PE, or even if you do a forward PE. Okay, anywho, but Joby Aviation, here's why I don't like these kind of stocks. I've seen Archer Aviation, or it doesn't matter the industry. As you know, I like looking at the numbers. If we go to their revenue, oh wait, did they just get their first ever thing of revenue? That's great news. So look at this. Before today, 2025 Q2, the revenue was 15,000. They had no revenue, revenueless company, no sales, but for the first time ever, it looks like they do have revenue, 22 mil. They did lose a lot of money on that. They lost 400 million, 300 mil, 100 mil, 200 mil. So I'm guessing they're diluting you a bunch. Let's go check cash from investing activities. So yeah, they diluted you by almost $1 billion. But look at this. Toyota Motor owns 15 or 14% of all the shares. It's good that they're in a super transitional phase where the next couple, probably year, is going to be super volatile as they finally report revenue. Because remember, the whole company the market cap is $14 billion. It's tough to justify 14 bill valuation if they miss on their growth, because the story is almost priced to perfection. So anyway, they're interesting that they're just now getting revenue. That's the good news. So I wouldn't even consider it if they didn't have that first ever stream of revenue there. So here's AppLovin. Let's check this one out. Company just got added into the S&P 500. Phenomenal stock. Let's see if there's any news on them. Strong results, raises guidance. When did they just reported earnings. Let's go check it out. Let's go check it out on the earnings hub. I love this company. So revenue growth of 68% by the AI-powered Axon ad platform. Adjusted EBITDA margins improved to 82%. Net margins of 60, free cash flow of $1 billion. Dude, there's no way. Let's go look at how phenomenal they're not. If you ever look at a stock that just like in 2019, where's 2019? Oh, wow, that's 2023. Wait, they went public in 2021. So this is like such a short stock or short. There's a very few amount of time in this chart. It looks like it's longer, but literally this IPO in 2021 is 50. Now it's, 550. This is what justifies that. If we go to the revenue, of course, grew 69% year over year. So the revenue's up 69, but the net income is up by 92. These year over year growth rates on the net income are the best part, because that means margin expansion. Like, I can't believe they're at like 60% net margins now. So they made 835 million of net income. That's after they paid 200 million of taxes. Like, that's insane. And let's look at the free cash flow number. I think they said it was $1 billion. Let's see here. What app is this? Yeah, hey, Christian, this is a brokerage where you buy stocks on. It's in the link tree in my bio, that very first link there. But yeah, that's what FCF stands for, free cash flow. It's up 92% year over year to a record, $1 billion. Insane. So I want to own this stock eventually, just at a lower valuation. The PE is a little high, but they deserve a high P, like SoFi. Hey, what up, Catherine? How's everyone doing on this Tuesday? Happy Veterans Day, everyone. Any vets in the chat? We got to give a shout out to them. So let's pull up ASML. Oh, hey, what up, Best? He said grab stock. I'm pretty sure when you stop using Ozempic, your metabolism will decrease your appetite. Still uses medicine for... Oh, hey, thanks for that, Marcus. That was when yeah. Well, let's get to ASML right here. All right, what up, Nick? So ASML, they're nearly at an all-time high. This is the lithography company. Yo, shout out to Kian. Hey, Kian, thanks for the rose day. Remind me to get to PRCT after this. Thanks for the gift there. But yeah, ASML, they're at a new pretty much all-time high. Well, pretty close to all-time high. Let's go see what the earnings were. I love this company. So revenue of 7.5 billion fell short of consensus from weaker China sales. Gross margin of 51% met higher than guidance. Net bookings totaled 5.4 billion. This is an EU company. They trade at 36 PE. That's actually pretty fair when you compare that to like an AMD or Nvidia or something, or a Broadcom. But yeah, they print money, and this is in USD. We've converted it from euros to USD, but they make legit 2.5 to 3 billion of net income a quarter. And this growth rate, what's it going to be the same time next year? They're deleveraging their balance sheet. The liabilities used to be 61% of the assets. Now it's only 57. They also pay a dividend. Their dividend's kind of cool because it changes every quarter. You never know what it's going to be. But yeah, $1.86, $1.84, $2, $1.50. So, what's their net margin here? They make that China tried to steal their stuff, and like the U.S. Military like came in and legit helped out ASML. Yeah, look at this, 28 to 35% net margins is crazy. So yeah, ASML is cool. Hey, what up, Something? How's it going, man? So, uh, hey, what up, New York? I hope you're having a great day, man. He said HITI. What up, Tom? Yeah, we'll look at Grab after the. Oh wait, no. We gotta we gotta look at the homie Ian's Kian stock. Well, what did he say? PRCT. Okay, here we go. PRCT, and then we got to get to HITI and Grab stock. And hey, what up, Logan? Walmart, PayPal. Hey, we just looked at Jacob like literally less than 5-10 minutes ago. We looked at PayPal. So you can rewind it on YouTube, or we'll check it out in probably like 10 minutes or something. Hey, CRMD earnings tomorrow. Really? Okay, so here's PRCT. The stock, unfortunately, is at an all-time low, or not all-time low, but the same price as they were a couple years ago. Let's see if we can figure out what happened here. Do they have sales? They do. So 83 mil of revenue. Oh, but they're losing money. So they're losing 20 mil of net income a quarter. They have a pretty decent balance sheet, though, so it's not the end of the world. Yeah, that's actually really good revenue growth. Check that out. Revenue's up 43. After it grew 66, after it grew 98. So they're on a nice bit of growth here. They're probably going to be making like 400 mil of revenue a year. They need to fix their margins, get net income profitable. But as long as they keep up that growth rate, I mean, this company, look, maybe is interesting. I wonder why the stock has fallen so much. Like sometimes there's things you don't know. Like this is probably a biotech company or a therapeutics or medical devices company. What is this right here? Commercial stage surgical robotics company. They have revenue. Let's see what they have. Really? Hydros Robotics Systems. So some kind of medical device company. Actually, I'll put them on the watch list because they have real revenue growth, but I do wonder maybe they, I don't know. Interesting. I work here in engineer. I'm hoping it's going to go back up. Hey, that's pretty cool, Kian. So let's check out HITI here, and then we'll get to Grab. Sorry, there's a bit of a backlog of stocks we got to get to. I'll go quick with these. I only try and spend like 1 minute on each stock. Hey, invested 09. Dude, thanks for the golden boxing glove. No way. And the Dolphin, thanks for that, invested 09. If you got a stock you're going to look at, let me know. Appreciate that. What app? Oh, yeah, if you want to get this app or this brokerage I'm on right now, it's where you buy stocks on it. Link tree in my bio, the very first link there. It's called Moomoo. But here's High Tide. They're only worth $260 million. So very small company. They're only worth 200 mil. Let's see if they're worth 200 mil. Sorry, my Wi-Fi is really slow today. That sucks. So my apologies there. If you wanted to follow button, we stream every day. By the way, I sell nothing. I legit have no course, book, WhatsApp. I'll never follow you, DM you. I sell nothing. So it looks like a Canadian company. 92% of the revenue comes from Canada, and they're a brick and mortar store kind of thing. Revenue is expected to be 127 mil. They're expected to go EPS positive. That's good news because, yeah, the net income's a little choppy, but when they lose money, they only lose like 2 million. Well, I guess 2 million is a bit significant when you are worth 200 million, but the revenue's up 13. I don't know what does this company even do? Pharmaceutical retailer. It's a CBD store. They own a bunch of CBD stores, we'll call them, or leaf stores. So let's cover Grab right here for sure. Oh, CoreWeave. You know what? Wait, let's get to CoreWeave first, and then we'll get to Grab. So thanks again, Invested, for all the gifts there. Appreciate that. MicroStrategy, yeah, that's just, I'd rather own Bitcoin than MicroStrategy. They just like are a Bitcoin holding company. Wait, what was I going to look at here? Oh yeah, CoreWeave. They just reported earnings this morning. It was a bit of a disappointment. They said that they missed on earnings because they don't have enough workers to complete the data center construction. Let's actually go see what AI has to say because I didn't look into it too much, but AI infrastructure revenue surged 134% year over year. I mean, that's crazy. Driven by major contracts with Meta and OpenAI, marking the third consecutive quarter of over 100% growth. That's crazy. Profitability increased with highly adjusted over here. Operating income reached 217 mil, and net losses narrowing to 110. Wow, that actually they didn't lose that much, only 110 mil. We'll check out if that's true. Operational capacity expanded. Okay, cool. So that's good growth. That's the best thing about I've always loved about CoreWeave. If we look at like these year-over-year revenue growth comps, hey, thanks, Bert. I appreciate that, homie. Hit the like button if you want. But yeah, the revenue went from 583 mil to 1.36 billion. 1.36 billion this quarter. Wow, it's expected to be 2.5 billion. It's going to go from 900 mil to 2.5 billion. And if we go to net income, yeah, they only lost 110 mil. That's actually really good. Those were good numbers. Wow, I'm actually a bit impressed by that. You know what? I would honestly maybe look to buy the dip on that one eventually. Not too shabby. Hey, SoFlo, dude, thanks for the 22 roses. No way. He said RR, please. Hey, let's do Rich Tech Robotics. Yeah, hey, this is a big momentum company because I've looked into them before. This isn't a great robotics name. They don't really have any IP or patents. Well, they just don't really have any revenue. Like out of all the robotics stocks that exist, like if you just want exposure to the best robotics company, in my opinion, this is far from it because like if we go to the revenue, it's almost like a startup. The revenue this quarter was 1.1 million and it was down 18% year over year. So they really don't have any revenue, losing millions every quarter. So nothing's really blowing me. Or what's the analyst expecting? I guess analysts are expecting 2 million of revenue in 6 months, but nothing's really blowing me away here. There's just been a lot of momentum since they had I think it was this is all marketing. It was all marketing. Some partnership with, can anyone sense my air quotes there? But the partnership with NVIDIA, it's just big marketing tool, but yeah. If you're looking for the best robotics play, in my opinion, first off, that'd be Amazon. Though it's not a pure robotics play, Amazon is the best. But then second best would be Symbiotic. They're also down 7% on the day. So if you're looking to buy the dip, maybe nibble. I don't know. But this company has over 1,500 registered IP and patents. It's a warehouse robotics company with real growth, real revenue. Revenue's up 25%. After grew 50, after grew 77, after grew 35. So they're on a streak of growth and beating on expectations every quarter. Look at that. Analysts expected 533. They reported 592. And who are the ones that own a bunch of warehouses and need the warehouse robotics to save on workers? It's actually Walmart and Amazon. Amazon just does the robotics themselves, but Walmart, their way to invest in robotics was to actually, since they're the biggest customer of Symbiotic, they actually bought them. So Walmart owns 13.5% of all the shares here. So they kind of have aligned paths, or I don't know, an aligned focus there. Okay, sorry, I'm so behind on so many stocks here. I feel so bad. Yeah, hey, Logan, isn't that pretty cool? Since you were talking about Walmart stock, they actually own a bit of a Symbiotic. Pretty cool there. Yeah, hey, SoFlo, hopefully that was helpful there. Sorry, I kind of bagged on your RR stock, but nothing was really blowing me away on that stock. No real revenue. I have looked into them, but here's Grab Holdings. This is a very cool international play. This is international Uber. So they literally do exactly what Uber does, but in all these countries. Notice the US and Canada aren't really on here. They aren't on here. Malaysia is 30% of the revenue. Indonesia, 22%. Singapore, 20%. Philippines, 10%. We know the commodity of needing ride sharing services, things delivered to you, whatever, is universally needed. And Grab is the international play. And also, they're backed by Uber. I remember looking at this company a year ago. Uber didn't own any of this company, but Uber, this was genius for them because this gives Uber instant international diversification, but they own 13% of all the shares. Toyota Motors, another big shareholder. They're also now net income positive every quarter, making real net income pretty good. Oh, sorry about that. Yeah, I actually really like Grab. They might be slightly overvalued. I wonder what the forward PE on this company is. Grab, I'd definitely put them on the watch list. Definitely a cool company. Hey, what up, Tom? SLM, please. What platform is this? Yeah, hey, by the way, this is actually a brokerage. It's where you buy stocks on. They ask for like a bunch of information. It's in the link tree in my bio, that very first link there. It's free, costs nothing, no fees. That's what I love. No commissions, nothing like that. By the way, all these brokerages are all in the link tree in my bio. Not sure which one you were talking about there. Yeah, we got Robinhood, Webull, and Moomoo. How's it? Oh, I wanted to get to CPRX. That's actually a phenomenal, interesting little pharmaceutical company. Anywho, let's get back over here. I specifically use this brokerage because it's the most useful for analysis tools. Like, it is free, costs nothing. Link tree in my bio, very first link there. All the brokerages are linked up there. Full disclosure, all of them are all affiliate links. All right, ONDS again. I think you did it a week ago. All right, let's check it out. ONDS. Oh yeah, we got to get to PayPal, and I'm so slow. There's so many stocks I'm behind on. All right, we'll check out CRMD. Hey, watch out for that guy in chat there. Oh my goodness. There we go. Okay, we got him out of here. We can get him. All right. Okay, sorry. Let's check out ONDS right here. So this one is a crazy momentum play. They don't have too much they report earnings on the 13th. So literally in 2 days, get ready. Let's see what the earnings hub has to say. What are analysts expecting here? So analysts, well, again, very small company. The revenue was, 6 million this quarter, but analysts are expecting 7 mil and then 9 mil. If you kind of annualize that, that'll hopefully be 40 mil of revenue a year. Strong backlog in recent contracts, whatever. Again, very small company. You don't want to have like a lot of your portfolio in here, but we're hoping to see, the revenue went from 900K to 6 million. Well, it used to be 4 or 5 million, then it crashed and now it's back. So they lose 10 mil a quarter. That's not too bad. There you go. I guess it's like an autonomous robotics kind of LiDAR play or something. I'm not too sure. Okay, so let's check out should I buy stock early in the morning or at the end of the day? Hey, or it kind of just whenever you feel like. I don't think there's any benefit. Yeah. Hey, what up, Best? Okay, so here's CoreMedics right here. I love this stock. I actually own them in my Roth IRA. But as much as I love this stock, yo, Tim, thanks for the roast there. If you had a stock you're going to look at, let me know there, Tim. Sorry if you said one and I didn't get to it. But here in our Roth IRA, we actually own 50 shares of CoreMedics, which isn't much. It's about $500. We're down 5% on our position here. But this is a great company. A lot of short interest. I'm not always too scared of the short interest companies. So 20% of all the shares are being shorted. But here's why I love this one. I just judge them off their numbers. Oh, hey, watch out for that guy in the chat there. Oh man, I can get him fully banned off TikTok, actually. Jeremiah Zane is no longer on TikTok. Let me copy and paste his name real quick to my guy. Yeah, hey, if you ever see those guys in chat that are like, the first person to DM me, I'm giving away. Yeah, hey, by the way, I sell nothing. I have no course book, Discord, WhatsApp, Telegram. I'll never follow you. I'll never DM you. Literally nothing. So the only thing I do have is a YouTube channel. So if you want to support me, best way is just subscribe to my YouTube channel. It's called Nathan Roberts, also in the link tree in my bio. But anyway, here's CoreMedics. 20% of all the shares are being shorted. But look at this right here. The market cap is how much the whole entire company is worth, 870 mil. So the whole entire company is worth 870 million. Here's the cool part. They literally have, and this company reports earnings tomorrow. So if you buy now, it's kind of like betting on earnings. Also, as much as I believe and love this company, I don't have too much money in them. But remember, the whole company was worth 870 million. They have 190 million of cash with no debt. So literally 20% plus of the whole entire market cap is cash on hand. Plus, they're now printing money. So already 20% of the market cap is just their cash on hand, and they're making 20 mil of net income a quarter. This 20 mil of net income they made this quarter is the same as 28 cents of EPS. And check out the future EPS growth rate. They're expecting the EPS to go to 82 cents, which means the net income is going to go from 20 mil to like 50 mil a quarter. So I can't believe it. So it's an $870 million company with 190 mil of cash on hand with no debt, and they're going to be making 100 mil plus of net income a year. Like 20% of all the shares are being short. I think they're wrong. So as much as I love them, though, I wouldn't make this a meaningful size position. I got 50 shares, but if you judge a company off their financials, they have like the best ones ever. Pretty crazy. Yeah, InnoData is hey, what up, Jay? Yeah, InnoData is great too. I also own InnoData, but they are down 9% on the day. They had some great earnings because they announced some like $25 million federal government contract. They're up 2,000% the past 5 years. We're only up 86% on them. It's not like we bought the dip too much on them, but and again, as much as I love them, they're not a huge size position for me. I love having these kind of stocks where I love their story, I love their numbers, but I know they're a bit overvalued here, and I can't put in a meaningful size position. So I have a bunch of those kind of stocks. Or actually, let me sort this by market value. Like, where is this? Like CPRX, Axon, Clear Secure, Toast. I only put like $400 or $500 in these names. I keep them small and then I let them grow into meaningful size positions, like PSIX too. So yeah. All right. I just picked up more. Hey, what up, Celebrate? Good to see you, homie. Nathan, this is why I love your stream. Hey, thanks, Logan. I appreciate you. Yeah, I'm a little all over the place. I do apologize. All right. Okay. Hey, Oklo. Yeah, Oklo's not too good. Wouldn't want to own them. Hey, what up, Luffy? Monkey D. Luffy said APPF. This is actually a really cool stock from their numbers as well. This is Appfolio. Actually, I don't know what they do, or let me look at their website really quickly, but there's some sort of software. I don't know, some sort of software, but check out the growth of their revenue. This is the good part. Well, first off, if we go to their net income positive. They're making 30 plus million of net income every quarter. The sales are really growthy. The revenue's up 21, after grew 24, after grew 25. So nice little streak of revenue growth and a fortress balance sheet. Legit no debt on this company. Let's see how much cash. They have 200 mil of cash. So not too bad. Free cash flow positive yet? Let's see. FCF, yeah, 83 mil of free cash flow this quarter. So what are their gross margins? 63% gross margins did fall a bit, but yeah, they really are making 30 mil plus in net income a quarter. Looks like a slight miss on their EPS this quarter. Beat on revenue, miss on net income, and a miss on EBITDA. Look at that. That might be why the stock might have fallen. The EBITDA was 49 mil. They only reported 35. But really cool stock. They might just be overvalued here. All right, let's check out. Hey, what up? Brandon said TTI stock. Let's do it. TTI. We'll look at BAER. We'll check out them. Oh yeah. Oh my goodness. We never looked at Oscar Health. I feel we got to look at Oscar Health after this. Pfizer too is really interesting. So here we go. Here's Tetra Technologies, new all-time high, new all-time high since 2019, we'll call it. This looks like a uranium company. The chart looks like a uranium stock. Let's see what industry they're actually in, though. I'm probably wrong. Energy Service Solutions Company. So maybe something, maybe they have something to do with uranium. Let's see here. It operates through its completion fluids and products division, water flowback division. So it's niche. Oh, so here we go. Completion fluids, that's 60% of the revenue. That's up 38% year over year. And their water flowback revenue is down. So look at these year over year declines in the middle here. That's not too great. Down 17 after it fell 2. But they're now making net income every quarter, and that's real. Like, they really are positive net income every quarter. That was after paying taxes. So maybe just the miss on growth here is what's hurting the company. I don't know, but it's not hurting the company. They're at an all-time high, but they are technically the same price as they were back in 2003. But since 5 years ago, they're doing great. So Oscar or Pfizer. Actually, let's do Pfizer here, PFE. So Pfizer actually just acquired NextEra, which is really interesting. So Pfizer acquires NextEra for it's over 10 billion when you add in their compensation if they deliver the growth. But this now gets Pfizer into the weight loss category. They've kind of been a no grower. Pfizer stock is the same price that it was back in 1997. So the stock has been flat for a long, long time. But check this out. Here's the value in Pfizer really is the dividend. You get a 6.8% dividend. So nearly 7% of your money back a year. You kind of just want the 7% dividend, and then you just pray for like 1 or 2% stock price appreciation on average every year. So it's mainly a dividend play. They own things like Viagra, and they were big during COVID, but looks like they should hopefully bring the growth back with this new acquisition. And they need to make at least like 3 billion in net income a quarter, and they have been, because the dividend cost, or let's go see, remember they have a 7% dividend. Let's go see how much exactly the dividend cost to see if it's safe. And the dividend cost 2.44 billion. So as long as they make 2.44 billion every quarter, they can afford the dividend. But you want to see them make a significant amount more than that to actually have some leftover cake for them. But as we can see, the numbers are really choppy back a couple years ago. Like, how are you going to pay a dividend when you were losing net income? So we don't want to ever see them go back to this environment where they were losing net income. So as long as they're making over 3 billion net income a quarter, which analysts are expecting via their EPS expectations, they should be good. And hey, shout out to the homie Brian, to the member Brian on the YouTube stream. Appreciate you, man. So thanks there. So yeah, that was Pfizer. Pretty cool. Whoa, wait, Pfizer changed their ticker symbol to FI. Wow, they did. You're right. So FI changed to FISERV. So apparently this company does like 40,000. Oh no, since they just changed ticker symbols, we don't get their original earnings expectations. Well, anywho, it was yeah, these are from 2023. That sucks. Okay. But yeah, Pfizer, it was a triple miss. Still not the end of the world. They still make 10 bill, or they still make $1 billion in net income a quarter, but they probably are appropriately valued at like 10 times PE there. Okay. Let's look at Oscar Health too. For fun, let's see. Someone said Oscar Health had a big drop BE because of Trump yesterday. Or oh, hey, what up, Lucas? Oh, hey. So here's Oscar Health. Let's see if there's any. U.S. Senate postpones ACA subsidy vote. Oh yeah, I remember the thing was ending. So the Medicare Medicaid. This is a Medicare Medicaid play. Let's see if they have any earnings hub. Revenue increased 23% year over year. EPS declined. Membership expanded 28% to 2.1 million. Medical loss ratio rose to 88%, driven by higher morbidity and risk. Okay. What I've always loved about the stock is how they just grow. Like, check out the annual revenue growth here. In 2019, 2020, it was 500 mil a year. Now it's 9.1 billion. I mean, like a 10x of the revenue. Revenue's up 23, after grew 68, after 45. So the revenue growth is there, but the net income, they're still struggling to stay consistently net income positive and make money. Hey, shout out to the homie Adrian. Happy Veterans Day. Yes, sir. Apparently, I thought the stock market would be closed today. It looks like only the banks are closed. Bank holiday. How's the market doing? Last time we checked at the SPY, we were at a new intraday high. Let's go see. So the S&P 500, look at that. Pretty much highest point ever in the entire day for the S&P 500, even higher than they were in this overnight market, pre-market. So S&P is doing fairly good. Looks like it's led by Apple. Let's see how my portfolio is doing. We're still red on the day. We're down 0.2% here in our main account, but McDonald's is doing great. Mickey D's and United Rentals. And Coca-Cola consolidated. Yo, how are they? They're up. No way. They're almost up 6% now. This is the bottling company for Coca-Cola. They just bought back 22% of all the shares in one day. Couldn't believe it. So what is JABIL? Hey, what is that? If you give me the ticker symbol, we'll check it out there. So Netflix with the upcoming stock split. Hey, let's check out Netflix right here. I think they're doing like a 1 for 10 or 1 for 5 stock split, something like that. Or yeah, 10 for 1 stock split. Yeah. So each share prices will be $113 now. It basically moves the decimal over. Or yeah, each share will be $113 if it splits at right now's price. It doesn't create or destroy any shareholder value. Sometimes there's just some momentum because psychologically a stock split is cool. But here's some cool data about Netflix. I'd love to own this company. Phenomenal net income metrics. They're making 2 to 3 billion net income a quarter. How many premiums or subscribers they got? 301 million premium subscribers. They make $11.69 on average per month per user. 25% net margins. They make 2 to 3 bill of net income. And how much of the free cash flow? Yeah, 2 to 3 bill of free cash flow a quarter as well. Netflix is a piece, but the PE ratio is still too high. Again, they deserve a high PE, but it's still tough to pay 47 times net income because, I mean, maybe they will CAGR annual EPS at like 15% till 2030 or something, but I would wait. I would wait to buy them significantly, or I would wait to buy them if you want to buy them significantly. Maybe you can nibble on them, but not yet. Any high risk, high reward stocks. Yeah, hey, I actually have a few of those in my Roth IRA. I have my real safety stocks here in my main. This is called my dividend portfolio at the top here. I mean, some of these are kind of high risk, high reward, but I don't even start. Well, I wouldn't even see them as high risk. Like CEG, it's like very volatile, but it's not that high of a risk. But in my Roth IRA here, I do have some very high risk, high reward stocks. I'll be quick here, but Wix, that's interesting. Vibe coding play, love them. InnoData, CoreMedics, Perimeter Solutions, pretty cool company. Callmain. I could talk for hours about each one of these stocks individually. Like it's crazy. Delcath Systems. I normally don't ever. I never would talk about a stock with this kind of chart, but legit, like 30% of their market cap is cash on hand. They finally have revenue and make net income every quarter. So wait, like here's a safety stock. Like this wouldn't fit your category. Waste management. Talk about one of probably safest investments out there. The AI can't really hurt this name. Everyone's got to throw away their trash, businesses, people, whatever. I just bought one share of them on the dip because, yeah, look at them the past year. Bill Gates owns 9% of the company. Yeah, they're down 9% the past year. We're actually up 2.5%. Plus, they pay a dividend. Okay, let's get back to looking at y'all stocks here. PRCT. Hey, we were just looking at this stock right here. I actually find them pretty interesting. What up, Mohammed there? Hey, we'll look at Duolingo too. Oh, we'll look at JBL and BAER. After this, bond markets are closed, equities are open. Hey, what up, Rulis? So, yeah, stocks are open, bank holiday, but stock market does sometimes close on some holidays. But yeah, check this out. This is what I like about PRCT. The revenue's up 42%, after grew 66, after grew 72. What's the short interest on this? I would be curious to see that. Okay, so there's some sort of short thesis here. Maybe sometimes you'll see like they don't have any exclusivity on their stuff, or their patents aren't fully, or whatever. Their short interest is 15%. So it looks like the shorts are eating this one, but it shouldn't scare you too much because these are still some pretty good numbers. I mean, it's not great that they lose 20 mil of net income a quarter, but the sales growth is there. Good balance sheet as well. So interesting name. I wouldn't have it as a meaningful size position, but maybe the risk to reward looks decent on that one. So BAER, Bridger Aerospace right here. So very, very small name. They're only worth $102 million. So the whole company's worth $100 million. Let's see how much they're making. So net income. So here's is that real? That's real. Like that. Where are they headquartered? If like Montana. But anyway, check this out right here. The whole company again was worth like $105 million. They literally made $34 million of after-tax net income. That's after paying $5 million of taxes. I guess if you average out the 4 quarters, because the other quarters they did lose 15 and 13 mil, but yeah, that leaves them about 1 or 2 mil of net income a quarter. But notice how the losses are narrowing. Basically, these year-over-year growth rates in green. Okay, sorry, my thing just glitched out there. We're back. Hopefully, we're back. But yeah, they're interesting. As long as I keep up this net income growth, this one actually is pretty interesting. They're kind of like a mini version of. They do aerial surveillance to watch for wildfires, fire suppression stuff, like fire retardant stuff. Kind of the same thing that Perimeter Solutions does. Pretty interesting. All right, Bert. Hey, thanks, man. We are back for sure. Let's see. JBL, FIX looks good, but analysts don't like it. Why? I think there's just not any analysts covering it, or all those. Oh, actually, good question. I'll show you how all those analyst expectations are old. Because no one talks about that name. But here's JABIL. They've done phenomenal since 2019. I love looking at stocks like I've never heard of. Hopefully, in the stream, I can just introduce you to some new stocks you've never heard of before. By the way, if you want to hit the follow button, we stream every single day. I sell nothing. I have no course book, WhatsApp. I'll never follow your DMU. And I apologize if I don't get to all these stocks in here. Hey, what up, Big Mike? Yeah, we'll look at FIX. Yeah, Progressive finally stopped dipping. I only try and spend 1 minute on each one. But check this out. I love how diversified geographically the revenue comes from. The U.S. is 25, Mexico's 20, China's 15. But it looks like they're in intelligent infrastructure, connected devices, or regulated industries, connected. Well, let's just see net income. This is good net income. They're making easily 100 to 200 million of after-tax net income a quarter. Sales are up 18%, recovering from historically the growth was gone on this company, but it looks like the growth is back. That might be what's exciting investors here. They pay a dividend and you get a 0.15% dividend. I like that they pay a dividend. Notice the payout ratio is only 5%. I think there might be definitely some future room for future growth there. So interesting stock, actually. Jabil, interesting. So let's look at FIX right here. My best investment ever, my largest holding by far. I'm not selling. And here's why: I'm not selling a single share. I'm not trimming or selling out. This stock, not financial advice, I think is just going to continue higher. It's definitely tough to buy here. But someone said, "Why are the analysts bearish?" Let's go check out the analyst here. Yeah, these are from actually October 27th. These are all in order of most recent. So October 27th, $1,000 target. October 27th, 24th, 23rd. But yeah, most of these targets right here, like 800, 600, they did these, a long time ago. Does Morningstar have any coverage on this name right here? No, not really. Yeah, so don't worry about that. But here's the best part. I'm a believer. MEP workers, electrical, HVAC workers are just going to be in such demand because of the AI boom. But check out I actually just made a TikTok about this stock right here, my most recent one actually. But look at and my most recent short. But their electrical segment where they do the electrical work is up 72%. After it grew 7, after it grew 32. Like this is the best part, like the growth of this is becoming a larger portion of their business. So the electrical segment is growing and the mechanical segment, that's up 25% after 42%. But no, that's not even the best part. If we could look at the revenue growth when we combine those two, the total revenue is up 35. So revenue's up 25 or revenue's up 35. But the net income is up by 99. That's insane. That means there's margin expansion. Their net margin went from 8% to 12. I mean, that just adds money to your bottom line. They did 291 million net income. That's after paying 80 million of taxes. That's insane. Free cash flow is a record this quarter. So everything here is headed in the right direction. They did 290 million of net income this quarter and they pay a dividend. The dividend only cost 17 million. There's so much room for future growth. And because of that, they're doing a bunch of share buybacks as well. So they have a 0.2% dividend, but the payout ratio is only at 8%. They're one of the few companies, I don't know any other companies that do this, but they raise their dividend quarterly or like faster than a year. Check this out. The dividend was 60 cents. Now, last quarter was 50, then it was 44, then 40, then 35, then 30. So I really like FIX. Hey, what up, Spread the Wealth? Good to see you, homie. The McRib indicator is the best one out there. Hey, I saw that. Yo, I wish I could pull up a screenshot right now, but every time like McDonald's officially brings back the McRib, the stock has like a 2-year bull rally or something like that. That'd be great to see. McDonald's is one of my largest holdings. Got McDonald's breakfast this morning. But yeah, we're up 9% on them. Actually, the best part about McDonald's, they're up 2% of the day. Tech is kind of struggling today, but defensive McDonald's is doing great. They're really a real estate royalty company. But yeah, we got a $26 dividend, $23 dividend, and we've bought more shares. We should get like $30 a quarter now from them. So yeah, it looks like the S&P is slightly recovering. The S&P is green on the day, up 0.12. So not too shabby. Duolingo stock. Ooh, UK was strong today. US start. Bit jittery, seems we're bouncing up. Yes, sir. So let's see here. Duolingo, let's do this one. Hey, Edzilla. Oh, hey, Open Door. Hey, that's that momentum company. Real estate momentum company. So here is Duolingo right here. It's like that language learning app. Honestly, I think they're worth buying the dip on, not financial advice. Like their subscription revenue was so strong. Or every metric still grew. It's just like a sentiment. The AI thesis is like hurting them, but the subscription revenue grew 46%. Their paid subscribers are now 11.5 million, up 34%. Gross margin slightly declined. Management projects 30% year-over-year daily active user growth. That's pretty good. So yeah, look at this. This is what I love. 85% of the revenue comes from their subscription model. So it's like a subscription model company, and it grew like these year-over-year growth rates in the middle justify the high multiple. Like it's up 45, after grew 48, after grew 46, after grew 56. And if you don't pay for their subscription, you see a bunch of ads on their app. And if we go to their advertising revenue, it grew 45% to a new record. So everything here is headed in the right right direction. They beat on every metric. Revenue, they had a one-time adjustment to their net income. They benefited from like a one-time tax thing from the beautiful bill, whatever thing. But look at this. If we go to the operating profit, it was at a record. This is what we really look at. It doesn't include the one-time adjustment. It still was at a record, up 160%. Revenues up 41. Deleveraged the balance sheet. So everything about Duolingo is headed in the right direction, but not the sentiment, because the OpenAI just created a competitor to Duolingo. And I think Google has one as well now, but their numbers are still so strong, and that's what I love. Let's see. China emerges as Duolingo's fastest growing market with Luckin Coffee partnership success. Really? That's actually really interesting. Resulted in over 10 million branded drinks sold. Yo, Luckin Coffee is also publicly traded. They're coming for Starbucks China. So much so that Starbucks literally just had to sell off Starbucks China to a private company. Did y'all know that? Was pretty interesting. Starbucks actually is closing stores, sadly. Well, it's just the consumers getting wrecked right now. But look at this. So, well, I don't know about sad, but I guess. But look at this. Sad if you're a shareholder. Their number of stores went from 41.1 thousand to 40,000. So the first time ever, their store count actually declined. It's really their margins. Like they're not making any margins. Like with coffee prices so high, and the value competition from all their competitors. Like this is so sad. They used to make it consistent, like $1 billion plus in net income a quarter when you average it out. Like they are 900. They always made like a good amount of net income, but look at these year-over-year declines. Very sad. Let me see right here. Basically, their margins are falling. So yeah, someone said, "What app is this?" Oh yeah, hey, by the way, this is actually a software where you buy stocks on. If you want to get it, it's in the link tree in my bio. The very first link there. Free brokerage, yeah, I love it. Oh, and if you like deposit $100, it's an affiliate link too, so we'll both get like some free stocks. Yeah, you can just type it into Google, brokerage called Moomoo. Okay, so let's see. My average on Duolingo is 277. Bought 30 of them. Hey, nice. Yeah, and this, I wonder what their forward PE is now. Palantir Technologies. Let's do that one. What up, Caesar? Or I think said that Palantir, PLTR. So again, this is a stock I would love to own. But the valuation is too high on this company, and they deserve to be at all-time highs. I could not believe the growth. If we go to their government revenue right here, which is most of the business, like a lot of police stations use their software, the military, Air Force, that grew, the ICE even, that grew 55%, after grew 33, after grew 12. So literally the growth rate is growing over here on the government revenue, and not just the government revenue that's growing, but also the commercial side of operations. That's the insane highest growth rate ever. It's up 72% year over year to a new record. Crazy. So both like that beat expectations here. Analysts expected 1.09, but they reported 1.18. Again, they not PE ratio, but the PS ratio, the price to sales, the price to revenue is 116. Like that's so expensive. I imagine 125 times a company's revenue is what they're paying. But again, the reason the multiple is so high because of all the future growth that is expected, and the future growth that'll probably happen. They're now printing net income. They made like $400 million net income. They literally have no debt, completely debt-free company. But the valuation's too high. But yeah, someone said short Palantir. I wouldn't short Palantir. Whoa, what's this? Michael Burry takes 1.1 billion short position against Palantir and Nvidia. Whoa, citing concerns around circular financing. We do know that there is a big circular bubble. I think he's just wrong about his timing. I think we're going to be doing good for the next 2 years more plus. So let's do InnoData right here. Yeah, let's do it. What up, Don? InnoData is one I own in my Roth IRA. Right here, I'll pull that up real quick. Oh, no way. We're almost green on the day. That'd be crazy. What about our Roth IRA? Are we green? No, we're still pretty far from green in here. But InnoData, because of InnoData is why we're far from green. They are down 9.3% on the day. They're still up 43% in just the past 3 months here. We're up 86% on our shares. Here's why I love this company. I put them on the watch list. I wouldn't buy in huge here, but I'd potentially nibble at these prices. I can't stress this enough. I wouldn't have this as like a super meaningful size position, but I do love them as like the picks and shovels bet for the AI, generative AI industry. Their largest customers are legit Google, Meta, Amazon, and Microsoft. But yeah, if we go to their DDS, their digital data solutions right here, look at the growth rate up here. It's up 99%. After grew 92%. So, and they just cited that's also beating expectations. Analysts expected 59, they did 62, and expected to continue to climb higher, be 69 mil, and then 72 mil. Their EPS positive. That's a crazy part too. Like they're making net income every quarter. It says that it's down 52%. They had a one-time adjustment that quarter. The actual profits did grow year over year. Revenues up 20, but they cited the reason they initially rallied up so much is because they cited a huge federal government deal. Let's see. This stock is so small, we probably won't get. They do have one. They do have an AI checkpoint. So, driven by new AI preparations. Is it going to talk about the? No. Oh well. Let's see. Maybe it's down here. The federal unit launch. Yeah, it's that one right there. Some federal. You know what? Who cares? But anyway, they're a cool one. They're only worth like $2 billion. Small market cap. Open door. This one you don't really want to have as a meaningful size position. Oh, and then we'll get to SIGA. What up, Charlie? Kingmaster. PLTR is shorted by Michael Burry. Yeah, isn't that crazy? We'll get to hey, we already looked at SLM. We'll look at PWR after this. So here's Open Door. Let's see what percent of the shares are being shorted on this one. Wow, notice it just spiked up from 10% to 22. So now 22% of all the shares are being shorted. Let's see. So this is just a super interest rate sensitive stock, and that's really what this is. Kind of like an interest rate sensitive proxy. What is Open Door? They flip homes, and they're not great at it. I've been to a few, but check out the revenue growth. When we were in a really low interest rate environment in 2021, 2022, when Fed panic cut rates to zero, they printed money. They were doing $4-5 billion of revenue a quarter. But notice what happened as rates hiked up in a very short amount of time to like 5%, making, mortgage housing demand collapse. I mean, the sales fell 70%, 69, 65. So the sales collapsed. And, now like lowest sales ever, 900 mil. What are analysts expecting here? Dang, revenue is going to fall to 500 mil. So used to be $1 billion a quarter. They're losing net income every quarter. So it's not one that I would buy from like a fundamental point of view. To no fundamentals here, but I would buy it if I was a swing trader, short term. Like if you just looking for a super volatile stock, maybe check that one out. We can also see what the interest rate cut probability is. If we go down here, actually, it's pretty cool. On the December 10th meeting, FOMC meeting, the market is pricing in a 67% chance of a 25 basis point cut. And my thing just disconnected there. So I might freeze for a second. There we go. But yeah, 67% chance of a 25 basis point cut. On January meeting, January 28th, we have another 53% chance of a 25 basis point cut, 38% chance. So that's just based off the Fed dot plot expectations, but pretty cool. Oh yeah, we can also see, this is another cool thing. Oh yeah, the institutional tracker, you can see what Berkshire Hathaway is doing, and ARK and all those institutions. But here's a cool thing also, if you're looking for like new stocks to buy, they have a bunch of different like sectors you can find new stocks. And if you're looking for, I guess, safe haven assets or Black Friday stocks, red shipping companies, copper companies, whatever, they just have so many new industries you could find out new stocks for. One stream, we're going to just like find a bunch of new stocks. Yeah, hey, try not to spam there. Hey, we'll get to CoreWeave eventually there. We already looked at them. Hey, we actually just looked at Netflix too. But Netflix, I think I would wait for after the split. And it's still a little pricey here. So let's look at PWR here. I'm so behind on stocks here. I do apologize. And we'll get to SIGA after this. Oh, hey, then we'll look at Clear Secure. I love Clear Secure. So here's Quanta Services. Wow, this stock has done absolutely like insane. Like there's not many stocks that have done this well. That's insane. Let's go check out what they do. So electric infrastructure solutions and underground utility infrastructure solutions. So they're beating on expectations. That's the orange line. They beat on revenue every quarter, met on EPS, met on EBITDA. Yeah, they're making great net income, and the growth rate's very good. 2 to 300 mil of after-tax net income a quarter, good balance sheet, and you get a dividend. Well, they raise it every year, very small, but yeah, as you know, as the stock goes up, the yield goes down. But that is some insane stock price appreciation. Not many stocks are doing that. It's probably a tough risk to reward to buy right here. What website is that? Oh, yeah. Hey, by the way, Joey, this is actually a software. It's a brokerage where you buy stocks on. It's in the link tree in my bio, that very first link there if you wanted to check it out. It's free. Are you good at rapping? You talk fast. Hey, sorry if I talk too fast. By the way, if you missed anything, I'm also streaming on YouTube. You can like rewind it. Yeah, watch out for people impersonating me. I'll never follow you, DM you, and I literally sell nothing. I have no course, book, WhatsApp. So if you want to hit the follow button, we stream every day. So here's Siga Technologies. So a very small market cap here. They're only worth $455 million. So looks like they just tanked on earnings. Let's go see what happened on earnings that caused it to fall so aggressively. So, okay, so we don't get expectations from analysts. So revenue this quarter was $2 million. So but last quarter was 81 million. Why are the numbers so choppy here? That is strange. They lost 6 mil in net income, but again, last quarter they made 35 mil, and that was real. They really did make 35 mil. That was after 10 mil of taxes. They have a great balance sheet too. Looks like no debt at all. 170 million of cash. That cash might be making interest too. I don't know. Certainly interesting. The numbers, the way they collect their money is a bit choppy, but sale of the company's oral and IV Tapox. So it looks like they sell a prescription, and maybe they gave some bad guidance. Oh, well, let's look over here. So Siga Technologies reports 11% annual EPS decline over 3 years. Oh, with total shareholder return at negative 14%, including dividends, and citing challenges. I don't know. I'd be careful with them. Wouldn't have it as like a meaningful size position. Hey, what up, Larry? Says, you think CEG is ready to break out? I hope so. Well, check that out. Maybe this is what you're talking about here. So this app, I didn't draw this. Whenever there is some kind of form, this brokerage will like draw for me. What is this? This is a double top. So hopefully, I guess they break out to the upside. But yeah, this is my favorite utility stock of all time by far. This stock literally owns 30% plus of all the U.S.'s nuclear reactors. It's the largest pure play for nuclear energy by far. There is no close second. They're also buying. They're buying Calpine Energy, which is instantly accretive, $2 of yearly EPS. Like, I can't believe that. And that's going to close probably any day now. Like, by a month or less. Nathan, give a stock under $20, but profitable company. NU stock, ticker symbol NU. But again, the share price is irrelevant because you can buy fractional shares. But here's some of them I have. I don't know if any of these are profitable though. Yeah, some of these I would never recommend. Like Six Flags right here. Did y'all know Six Flags? The roller coaster company is public. It doesn't want to load here, but they've done terrible, sadly. Yeah, they're lower than the COVID spike. So apparently things are worse in sentiment-wise than the peak of the pandemic on Six Flags. That's unfortunate there. But anywho, yeah, maybe Opera GX browser. Okay, let's see here. Nebius stock. Ooh, yeah. DNUT has been yeah. Let's see here. Nebius stock. Let's do this one. That's actually a stock owned by NVIDIA. If we go to the NVIDIA portfolio right here. Oh, wait. Hey, Logan. Actually, should we look at Clear Secure? Should we look at that one? Oh, a BBB Foods. Oh, VF Corp. That one should be interesting. So here's NVIDIA's portfolio. They own a bunch of CoreWeave. CoreWeave is down 15% on the day, which is if CoreWeave sneezes, maybe some of these other AI names will get a cold. Yeah, like Nebius, because Nebius and CoreWeave do very similar things. But yeah, here's Nebius. Wow, that looks almost just like the Constellation Energy chart where they had that double top. But yeah, here's Nebius right here. They got a huge deal from Microsoft. Let's see if we can find that right here. It's not going to load it anymore, but basically Nebius got an $18 billion deal with Microsoft. And it looks like Nebius signed a $3 billion AI infrastructure deal with Meta. Actually, I didn't know that. That's great news. So they signed a deal with Meta. Here's what I loved. Again, just because NVIDIA owns a stock doesn't mean you should. You should always go do your own research on them. And even before these, like the big announcement with Microsoft and Meta, they've already been super growthy. The revenue went from 14 mil to 100 million year over year. Immense growth on the sales. They are still losing a bunch of money every quarter, like 100 mil of net income a quarter. But analysts are expecting the revenue to be 300 million in 2 quarters. So there's just a lot of future growth that's expected here. Very interesting. So they're actually headquartered in the Netherlands. That's the country they're from. So there you go. Kind of cool. Did you buy any Zoetis? No, I actually do not own any Zoetis, but I think they're at a really good risk to reward right here. Which app is this? Hey, what up? No. Hey, by the way, this is actually a software brokerage where you buy stocks on. It's in the link tree in my bio, the very first link there. So TBBB. So BBB Foods. Would you invest in Bowl or Futsu? Hey, Ron, funny thing, I actually own both of those stocks. I own I own BULL and I own FUTU stock. Both are very similar companies and both I'm betting on will be winners. I'll show you that after this. So here's BBB Foods. They're worth $3.3 billion. Same price as they were back in 2024 though. Revenue is expected to have a great increase from 700 mil to 1.1 billion. Yeah, so revenue's up 35, but the net income fell. Is that real? So that was a one-time adjustment. It says the core business actually made 20 mil, but it didn't grow much. So actually the margins fell year over year. So that's interesting. They are a bit leveraged too, but the sales growth is really good. I mean, the revenue's up 35 after it grew 20, but the profits aren't growing at the same rate. Free cash flow though, hey, they're making more free cash flow, and I don't know. Oh wow, analysts are expecting next quarter them to lose a lot of money. EBITDA is supposed to go negative 50 million. Maybe that was like, I don't know. Let me actually check out their website for fun. It says discount store. Daily grocery needs. Oh, that's a weird URL. All right, let's click it anyway. Okay, can we load quicker here? So this isn't like some American company. Looks like it's a grocery store, something like that. Anyway, interesting. Wait, were they in Mexico? Is that where they were headquartered? Wait, let me check. Market. Oh, so okay, that makes more sense. All the revenue actually comes from Mexico. So like a Mexico play, if you want like I think they're like a grocery store, retailer, I don't know, just convenience store thing. Let's look at VFC right here. This is VF Corp. This is the apparel company that actually owns the North Face, Vans, and actually, things are so bad. Look at the stock price. 2019 or 2020 pandemic, they were $50. Now they're $14. Things got so bad. This company used to own Supreme, that hype beast brand Supreme, which I can't remember the last time I've even seen a human wear Supreme, like in person. But I don't know why, but they had to sell Supreme. They sold off Supreme for $2 billion to deleverage. Because things were bad for them. Look at this. They were losing a couple hundred mil a quarter. It was tough back then. So they sold off Supreme, and now it looks like things are getting better. The year-over-year growth rates are really good year over year. They have a lot. Yeah, see, look at the debt they had. If you go to the cash from investing activities, again, if this number is positive, that means they sold an asset, and they sold that Supreme for, it was $2 billion, but they did an investment too, so it offset it. But yeah, anywho, pretty interesting. I like the North Face brand, and they own the other like JanSport, other brands like that. All right. Walmart stock here. We can do Walmart. Here's your U.S. grocery store. They're a grocery store play and real estate play. They're partnered with Symbotic for robotics, which is kind of cool. They own like 14% of them. Oh yeah, Sam's Club. I love Sam's Club. It's like a Costco. $1.50 hot dog and stuff, but it's just it's such a safe stock, defensive name. Whenever tech is down, usually Walmart's green, Walmart's green 1%. And look at the net income, they're making pretty much $5 billion plus of net income every single quarter. And they share that with you as well via dividends. You get a 0.85% dividend yield and a little bit of share buybacks too. It's probably tough to buy them right here at all-time highs, but very nice defensive grocery store there. The PE, 39 PE might be a little expensive, but they've always kind of traded expensive. So Emperor Penguin or Emperor said PG stock. Let's do Procter and Gamble. Yo, Mohammed, we just looked at we looked at PRCT the first time you said that. By the way, if you miss anything, we're also streaming on YouTube. Uh, Oh, hey, Adobe stock. Yo, Adobe's getting, SoFi. Carter, what up? We'll look at SoFi after this too. There's a lot of good stocks I want to get to. So here's Procter and Gamble. You know, they own a lot of like billion-dollar plus brands like Tide, Old Spice, Gillette, razors. They're an absolute staple. You know, look how diversified that they are. Fabric and home care is 35% of the revenue. They own Huggies, like for feminine, or I just combined baby and feminine. They sell baby, feminine, and family care products, beauty products, healthcare products. So I love how diversified that they are. And they print money. Look at this. Easily if you average it out, they're doing $4 billion of net income every single quarter. So plus a great yield. Wow, a really good yield, a 2.8% dividend yield. Like that's a good yield. That's very safe. Or here's how we can tell that the dividend's safe. Again, the reason, if you're wondering why is the stock doing so bad, they lost the growth. Well, if you add inflation to it, if we look at their revenue, you know, the sales, the lifeblood of the company, again, it's kind of law of large numbers, hard to grow this, but the revenue is only up 2.9. Last quarter, it was up 1.7, 2, 0.6. So low single digit revenue growth that might like 3% revenue growth that just pretty much matches inflation. Anyway, they were making, you know, 3.5 to 4.5 billion in net income a quarter. The dividend, you know, you just go to the cash flow statement and you scroll down to find the cost of the dividend. The dividend only cost at the top here 2.55 billion a quarter. So easily can afford the dividend, and since they have leftover money, they do like $1 billion a quarter in share buybacks. So just a shareholder friendly company. With a lot of brand, you know, I got a lot of Old Spice like deodorants I've gone through. Okay. Tommy, dude, what up, man? Hope you're having a great day. Here's Carlyle stock. This is a bit of an interest rate sensitive one because about 30% of their revenue comes from residentials. So like houses like you and me. And that part of the market is being crushed. Like their commercial side of revenue is doing great, but it's that another reason to like the slowing growth is if we go to the cash from investing activities, they sold off their cable business to Amphenol stock, another stock that we own, but they sold that off, and that's no longer part of their business, so that they don't have that revenue. So the year-over-year comps of the revenue look tough because they sold off that business. But here's what we're working with. They're making, you know, 200 million plus a net income every single quarter. So they're making 200 million in net income a quarter. You're not going to believe this. The best part about Carlyle is the share buybacks. Look at the top. They legit spend a couple, like $100 million a quarter on share buybacks. They pay a dividend. The dividend only costs $47 million, but the best part is the share buyback. So if we go to the net income is down by 12. Oh, dude, we got to mute that. Try not to spam there. That's not cool. And that's not even a stock either. But yeah, the net income fell by 12, but the net income per share only fell by 5.1. They're doing 4 to 5 of EPS a quarter. I just really like Carlyle. I do own them. I actually own quite a bit of them in my. They're in my main portfolio. No one's really ever heard of them. No one talks about them much. But their capital allocation strategy of doing share buybacks, dividends, and synergistic M&A makes me like this name. So yeah, we are down on them. We're down 3.22% on Carlyle. So yeah, looks like Google just went green. No way. We're almost green on the day. Yeah. All right. So, hey, we just looked at PRCT. Dude, I've never heard of this stock called PRCT, and 4 different people have like been talking about it today. Did some YouTuber make a video or what? What's so popular about that name all of a sudden? I wonder. Okay, let's see here. And so, hey, if you give me a minute, we can look at them a little later. We kind of just looked at them. We've already looked at them a few times. Hey, random guy, what up? He said him stock. Let's do it. Hey, what up, Paul? We'll look at Pfizer. What is Auto Energy ticker symbol? If you give me the ticker symbol, check that out. HWM, and then we'll check out some of these other names like Nokia. Hey, I heard like Nvidia took a $1 billion stake into Nokia. Pretty interesting. So here's hims and hers. It's that healthcare company. Let's see what they just reported earnings, I think, last week. Let's see what they said. So revenue increased 49% year over year, fueled by 50% rise in online revenue and 21% subscriber growth. So they have 2.47 million paying subscribers. That's pretty cool. So let's go look at their actual expectations. I think so look at that. They just reported earnings, Q3 numbers. They beat on revenue, but they missed on EPS, so they missed on net income, and they missed on EBITDA. So their margins did go down a bit because they're no longer selling that weight loss prescription at as high of a margin, but the growth was still there. So from their testosterone and other products, and then probably just subscription revenue. But the revenue's up 49, after grew 77, after grew 56. So that's the one thing I love about HIMS and why I wouldn't just completely dismiss this stock as some meme company. Like, this isn't a meme stock. Like, they have real fundamentals and real growth that I think they're still kind of struggling to make real profits, but they're still making money every quarter. So there you go. Hopefully that was helpful there. Hey, remind me to look at ACE stock. Or should we go ahead and look at it now? I'm so behind. On the chat here, Auto Energy. Wait, let me just type that in. So OEL. This is it. Oh, hey, yeah, we're not going to cover this name, sadly. If you look in the top right, they're only worth 23 million. That, and then they're a penny, like not even a penny a share. So we just don't really cover those kind of stocks. And they're on the Australian Stock Exchange, so you're paying ADR fees and stuff. So sorry if you got another stock you can look at, let me know though. What up, Star? What app is this? Yeah, hey, by the way, this is actually a software, a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, that very first link there. Yeah, hey, what is Data Vault AI? I don't know. Hey, sorry there. If you got a stock you want to look at, give me the ticker symbol instead of the name. I don't know if I've heard of that. Cool. I own some APH shares. Dude, I think they hit an all-time high yesterday. Swipe it down. But dude, Amphenol is like, I think, just going to be a winner for the whole AI boom. Like, this is like, it's almost like the NVIDIA picks and shovels play, but they're like the picks and shovels of NVIDIA. So anyway, oh yeah, they bought Textron, and they bought, someone was saying earlier, CommScope, CCOM, I think. Their main business, which just reported for phenomenal earnings, is being bought by Amphenol. Bull just bought a few shares of them. That's the right thing to do. That's a stock. If you're looking for an interest, I'll be super quick. Here's a really cool bull case for you. If you're looking for an interesting stock to buy, this one IPO'd. They're at an all-time low, but they just IPO'd like 7 months ago. But they're at an all-time low. Here's why I just bought the dip on Webull. Not financial advice. I'd buy the dip on them, but not with a meaningful amount of money yet. Lightfully buy the dip on them. But that stock right there, ticker symbol Bull, is this brokerage, this app right here. The ticker symbol Bull is the Webull right here. That's this brokerage publicly traded, and this brokerage just added prediction markets, and that's where they're going to make a juice. And they didn't just add prediction markets; they also added crypto. So whenever you buy a stock or sell a stock on this brokerage, they make like a fraction of a penny. But whenever you do this prediction market junk in the crypto market or crypto transactions, that's where they make a juice of a fee in a high. And that's actually why Robinhood stock is doing so good. That's how we're up 9x on Robinhood. Well, they have reported phenomenal results. They said over 6 billion, or way more than that now, because that's like last month's newspaper. Robinhood has done over 6 billion of these prediction market contracts, and they just juice fees off it. So that's kind of why I think analysts might be a little wrong on Webull's growth rate. I think their annual sales growth rate might be a little higher, and their margins are going to go higher. So anyway, that's Bull stock, ticker symbol Bull. Again, as much as I love them, actually, I get paid in like 2 days, so I'm about to actually buy the dip on them. What does APH do? Amphenol is the cable. Well, they have 3 main businesses, but they're the copper cable supplier for NVIDIA, main supplier there. And well, they're just a beast of a company. They're in so many different industries. Like, they're in aerospace and defense. That's like 8% of the revenue. Like healthcare. Like, they're in so many industries that need like these specialty cables. I heard someone call this the nervous system of AI, or the nervous system of AI. So like, they're just I've made a couple YouTube videos about them. Bro, are you negative on the year to date? No, actually, yeah, if you guys got any questions for me, let me know. I'll always share my lifetime performance. Check this out. Year to date, we're up 83% in this portfolio. You know, the S&P 500 is up 16%. The reason we're up 83% year to date is because we didn't sell before today. Like this company right here, we bought all our shares this year and they're up 168. Same with Amphenol. We bought all our shares this year. We're up 130. Coca-Cola consolidated. We bought all our shares. Actually, they're in an all-time high today. No way. They're almost up 6% now. I actually can't believe these candlesticks on Coca-Cola consolidated. They just bought back 20% of all the shares that exist while the stock's at all-time highs. Ferrari's been one of our newer picks in here. We bought them 2 weeks ago. They've now recovered. MUSA. But also, let me share my other portfolios. Look at it in the top left, our open P&L, though. That's our lifetime performance. Open, we're only up 19% all time. But let's check out the year-to-date. Year-to-date in the top middle here, we're up 29%. Oh, year-to-date dividends. Whoa, let's check out the dividends for anyone who likes dividends. We got some dividends from Progressive, T. Rowe, Clear Secure, T-Mobile, Calmaine, Disney, and the cycle repeats. So yeah, this is our risk on portfolio. We've had like Sprouts Farmers Market tanked on earnings, Axon tanked on earnings, Calm did, Progressive. So anywho, oh, and then we also have our Robinhood portfolio, which, sorry if I'm taking up too much time here. We're up 13% year to date in this portfolio. So we have so many different portfolios. We also have a Roth IRA. Roth IRA is up 5% year to date. We started this one exactly a year ago, pretty much. But yeah. Okay. I'm going to buy the dip on Duolingo. I would nibble on that one. Absolutely. The risk to reward now looks pretty good on Duolingo. Should we check them out again? Their subscription growth is just nuts. So let's look at CRD over here. Hey, shout out to the member, Brian Paul. Appreciate you, homie. I bought Hims yesterday. Think it's, hey, what up, Lucas? Oh, remind me to look at XBing. Yeah, that's that Chinese play. PFE and CoreWeave. I was talking, oh, hey, we'll pull up CoreWeave after this because CoreWeave reported earnings. Why do you have so many portfolios? I know, I definitely got too many here. But here's Quanta Technologies. I was actually just doing a deep dive into this stock and I didn't notice. They're actually headquartered in the Cayman Islands. Yeah, the Cayman Islands. So what does that mean? That means they've never paid a single dollar of tax ever. Or well, actually, they had to pay a little bit of tax, but this company doesn't have to pay taxes, so their margins are very good. So whenever the core business is doing amazing, like it is right now, the revenue is up 273 after it grew 70. So they're on a nice streak of revenue. They're printing net income now. 63 mil in net income, 40 mil, 30 mil, and a fortress balance sheet. Legit no debt. Like that's the kind of stock I want to own. 480 million of cash. That probably makes some interest too. Yeah, 3 mil of interest a quarter additional. So that's pretty interesting. Yeah, I'll show you the tax rate right here. Tax rate. Yeah, they had a 2.6% tax rate. They don't pay taxes. So that's kind of what's cool about them now. Another stock kind of, I'm not going to remember the ticker symbol. It's like some insurance company. Or they're headquartered in the Bermuda. But okay, I'm gonna miss so many stocks here. When is the AI bubble burst? Oh, let's look at CoreWeave. Oh yeah, CoreWeave. Let's do CoreWeave real quick because that's a big NVIDIA stock. We go to the NVIDIA portfolio right here. That's their largest holding. You know, they also own APLD, ARM, Nebius, but CoreWeave is actually down 15% on the day. Probably partially because they're pretty highly valued before today, $44 billion market cap. But they had great numbers. They noted they literally could not get enough workers to like build and get enough supply to like build their new data centers. But check this out. Their AI infrastructure revenue grew 134% year over year, driven by major contracts with Meta and OpenAI. The best part about this stock has been how growthy they are. You know, just because NVIDIA owns a stock doesn't mean you should. Go do some research on them. Go do your own research on them and check out how, again, they just IPOs, so there's not too much growth. But in literally 2023, they were doing 100 mil of revenue a quarter. Now it's 1.3 billion. An insane increase year over year, triple digit increase every single quarter. The past 4 quarters, they're still losing money every quarter, but they actually lost less net income than expected. But check out the revenue expectations in 2 quarters. Revenue is expected to be 2.5 billion. It's like so much future growth expected. So Corey's a beast. And NVIDIA actually agreed. I can't believe this. NVIDIA agreed to buy their basically agreed to buy the capacity of their excess GPUs that's not being used. Okay, so What is your analysis for ENTEF? Well, hopefully I can find that one. ENT, that's a weird ticker symbol. Yeah, unfortunately, I typed in ENTEF. I could not find that one. How many shares of Bull are you going to get? I'm probably going to buy another 10 shares of Webull. Oh, yeah, XPeng right here. XPENG. Or what's the ticker symbol? Or we'll just find it. It's XPEV. So they have a surge of orders, I think like record demand. Let's see. XPeng reports strong sales led by Mona MO3 model. When are they expected? Report earnings on, or we'll figure that out in a second here. You know what? Let's just go look at their numbers. So they report earnings on the 17th. So that's in 6 days. They still lose money every quarter, but out of all the like EV names out there, you look at Lucid, Rivian, Neo, they all burn like hundreds of millions in net income a quarter. But this one's finally narrowing their losses. They only lost 66 million. Like that's reasonable if they only lose 50 mil a quarter or even less at this growth rate, so that's good. And the sales growth is nuts. I mean, we by the way, this is a Chinese company. We've converted the currency from Chinese yuan or yen, or that Japanese yen, Chinese yuan. I don't know, but revenue super growthy. And that's probably what's leading to the increase in stock price. I don't know. I don't love this industry. Oh, it looks like Porsche owns 5% of all the shares. Really? So Porsche owns 5% of the company. Alibaba owns 4% of the company. So there you go. It's like it's probably the best Chinese EV play besides BYD. BYD is really your Chinese manufacturing play. Hey, Brandon, we cannot cover DKNG. Sadly, just because of the industry. If you like this stock, DKNG, for their gaming business, whenever you go place it's gaming stuff, we'll call it. I actually like Robinhood or Webull stock as a play now to get exposure to that industry as in a probably much safer bet too, because of like Robinhood adding this prediction market stuff, where it's pretty much the same thing as not exactly, but you can bet on stuff just like that. So anyway, I don't love DraftKings. They haven't been able to make real money. Like they made net income last quarter, but when you average out the other 4 quarters, like they lost 250 mil. I like Webull stock and Robinhood stock and Futu stock. MasterCard. Ooh, let's do. We'll do ENVA. MasterCard. I think Nancy Pelosi owns that one, or maybe it's Visa. Let's see here. She owns Visa stock. Visa and MasterCard legit have like a shared duopoly. MasterCard is more of an international play. I think this is what's so cool about them and why some other people like MasterCard more than Visa is because the US is only 30% of the revenue on MasterCard. It's only 30% of the revenue. 70% of the revenue actually comes from outside of the US. So, the small little micro credit card transaction fees that are slowly bankrupting us are making Visa and MasterCard a boatload of money. They legit make 3 to income a quarter. And what is MasterCard doing with like $4 billion of after-tax net income a quarter? Well, they pay a dividend, and the dividend only cost $600-700 million. I love companies that pay dividends, extra little cherry on top there. So they pay $700 million of that in dividends, but the best part is they spend most of it on share buybacks. That's what really has led to a lot of the stock price going up. They do $2 to $3 billion of buybacks a quarter. Here's what buybacks do for you if you didn't know. If you go to the net income grew by 20%, but the net income per share grew by 23. Again, the EPS growth and the net income growth should always be the exact same. So the EPS is artificially higher, which makes the EPS or the PE ratio go down. There's also less shares that exist, so it gives you more ownership in the company, and it makes the dividend cost go down. So basically it makes the stock go up. You get a 0.5% yield. Notice they raise the dividend every year at a way faster rate than inflation. Some of these stocks raise their dividend by a penny a year, but they have major growth. And lots more room to raise it. So let's look at ENVA. Ooh, should we look at Broadcom and SLM? Hey, we already looked at SLM. We'll look at them again though. Do you think Webull will pop on earnings? I hope so, Steven. That's kind of my bet here. Webull can do bad until earnings, but even their next earnings report, I think they're going to give good guidance. Or even if they don't, it's really a 6-month play, but it's not even like a swing trade for me. I'm probably just going to buy and hold forever bull shares. So here's ENVA stock. They are at an all-time high today. So, congratulations if you own this stock. Hey, Angelo, remind me to look at Novo Nordisk. I do want to get to them. But yeah, they do consumer loans and finance loans, small business loans. Check that out. Their small business loans that revenue's up 29, after grew 33, after grew 27. So they're on a nice streak of growth. And check out the net income they made. They made 80 million of net income. It's after paying 22 million of taxes. So this is real. What's the revenue? So the revenue's up 16, but the net income's up 85, 85. So they're expanding margins now, double-digit margin. Whoa! For the first time ever, a 10% margin. It's never been like that before. So hey, hats off to this name. No wonder they're at an all-time high. The fundamentals are improving, and that the financials. I'm saying always in the long run. Sometimes there's short-term momentum and have a mind of its own, but in the long run, financials always explain where the stock is going to go and why it either goes up or down a bunch. So 6, 7, 8, 6 or 7 are okay. Okay. SLM. Let's do this one here. SLM Corp. This one has not done too well. It's actually the same, it's the same price that it was in 2001. So, but they pay a crazy dividend. What's that dividend? Let's see. So you get a 2% dividend. Looks like a safe payout ratio, 16% payout ratio. What industry are they in? Originating and servicing high quality private education loans. So private education loans, let's check out net income. Are they profitable? So the net income is a little choppy, but if you kind of average, if you average out, they're making net income every quarter, and actually well over 100 million of net income every quarter. So this is normal. The liabilities to be so high, it should be slightly lower than their assets just because of how these loan stocks work, because it's a liability. Revenue growth, please. Hopefully Wi-Fi is not dying on me. But revenue's up 42%. Not too shabby, but it looks like the stock is not doing too well. Or from its peak. Interesting. That's some private education loan company. XRP, hey, try not to spam there. XRP, I wish I could give you more thoughts on XRP. I know a lot of people like crypto. I actually don't own any crypto. I kind of regret that with how good Bitcoin's been doing. Looks like it says the stream's lagging. So if it's lagging for you, it's my fault, not yours. Okay, XRP. Hopefully this fixes. If anyone can still hear me, if you want, hit the follow button. If something happens and the stream goes down, if you want to hit the follow button, we stream every single day, sometimes twice a day. I might even do another live stream later today. By the way, I sell nothing. I have no course, book, WhatsApp. I'll never ever follow you or DM. Well, not in a mean way. I'll never follow you. I'll never DM you. I literally sell nothing. So, because someone just said in the chat a minute ago, was that you that just DM'd me? No, it was not me. I saw nothing. I'll never ask her. So here's XRP. Here's kind of what's cool. Like, they don't report earnings. So they can't miss on their net income number. They can't miss on net margins. So kind of like a catalyst-free asset. Okay. I'm so behind here. It's saying unstable internet connection. Video quality will be automatically adjusted. Okay. Dang. What's my we're at 1,000 kilobytes a second output. It's on red box. Okay, so it's definitely lagging. Someone said. Okay. It was okay, but then it got worse again. Someone must be like downloading a game. There are 5 or actually 6 people in this house right now. Probably all on a computer too. So who knows? It's even worse now. So if the stream goes dark, I'm going to wait a minute. North American cloud providers increase AI. So check this out. A lot of people know Broadcom for their chips and their TPUs, whatever, their semiconductor solutions, but they have this infrastructure software where they collect high margin, basically royalties off that. Not a lot of people know about. Like, look at the growth that they experienced recently. Like, they're continuing these crazy year-over-year comps. So the growth of that has been stellar. The revenue is going to continue to keep on growing according to analysts. But check this out. Revenue's up 22%. 22%. So sales are up 22, or well, it's comparing to that one-time adjustment from the acquisition, but the margins grew. They're making 4 to 5 billion of after-tax net income a quarter. Look at the FCF, which is free cash flow. It doesn't include that one-time adjustment. The free cash flow growth is nuts. It's up 50% year over year, 7 billion of free cash flow just in this one quarter. And it's like you get a good yield, a 0.65% dividend yield with Broadcom. Not too shabby. How are you liking that waste management? Hey, yo, we're up like 2.5% on waste management. Talk about one of the safest stocks out there. Everyone's always got to throw away trash, businesses, people. And, Bill Gates knows that. Bill Gates actually owns 8% of all the shares. They print money. They had a one-time adjustment this quarter. They make pretty much 900 mil of net or 900 mil of net income a quarter. Free cash flow is really good. So, they had a slight miss on their revenue from their acquisition of the medical device company. Let's look at Novo Nordisk right here, and then we'll get to Webull stock, maybe. Hey, Nathan, could you look at SE? Yeah, let's look at SE after this. We'll look at SE2. So here's Novo Nordisk. This is your weight loss prescription company. Well, Eli Lilly has been the main beneficiary of it, but this is the company that owns Ozempic. So, Elon Musk is on Ozempic. It's that weight loss prescription. They also own Wegovy. Novo Nordisk reports Wegovy liver benefits. Well, hey, that's good. Novo Nordisk was trying to buy NextEra, a weight loss prescription, but they lost the bid to Pfizer, which actually makes Pfizer a really interesting company. Why was Novo Nordisk, who owns Ozempic, a huge weight loss prescription, trying to buy another weight loss prescription? I'm saying prescription and not the word that starts with a D, because when I say that word, I get in trouble. But it's because they actually lose exclusivity in about 3 years, 3 years for Ozempic. And that's really why the multiple has collapsed and why the stock price has collapsed so toughly on this one. Yeah, if we go to their PE, price to earnings, basically price to net income, it's a 13 when the industry average is 22. Like Eli Lilly's is at like 40. It's because they're losing their exclusivity and they missed on growth expectations. Where analysts expected 12.1, they only reported 11.7. Look at this. If we go to the revenue grew by 11, but the net income fell by 22. And that was real. Like, that's not some one-time adjustment. Like, the operating profit fell 26 and the net income fell 22. So that just means their net margin, their net margin went from 38 to 26. So, but anywho, they might be properly priced right now. Like, the risk reward might be fair to enter that one, but I don't know. I almost honestly, if I had to pick one right now, I'd probably buy Pfizer because they bought NextEra. Like, NextEra is actually like really cool. Yeah, so they got another obesity prescription basically they paid 10 billion. This one is pretty much a dividend play though. You buy them for the 7% dividend, then you just hope for like 1 or 2% appreciation every year. Pfizer though has historically done awful. They're the same price as they were back in 1997, but you get the nice dividend. So let's get to SE. I think this is C right here. Wrong one. I think they're like an Amazon kind of stock. SWBI. Oh, hey, wait. That's a Pew industry. I don't know if we can cover that one. Actually, I am curious to see how the stock is doing. But here's, we'll actually look at them next. Here's SEA right here. This is C. Here's a cool metric. We get their quarterly active users of 664 million, up from 648 million. But this is an international play. Check this out. Southeast Asia is 70% of their revenue. Latin America is 20%. Rest of Asia is 10%. So they're an e-commerce company, basically like Asia's Amazon, and they're starting to print money, like real profits. And this is in USD as well. 400 mil this quarter of after. Well, let's see how much taxes they paid. They paid about 80 million of taxes. That makes sense. So yeah, that's 420 mil of net income, like of after-tax net income. Like that's great. Like, these year-over-year growth rates are really, like, especially when they used to lose money every quarter. Now they're printing money every quarter. Oh yeah, let's look at the free cash flow, the FCF. Free cash flow is 1.6 billion, up 161% year over year. So these year-over-year growth rates look phenomenal. That's why I really like this name. Actually, they still, I know, are a bit expensive here. Oh, they just reported earnings. Yo, do we get the earnings hub here? Let's check it out. Actually, if they tell us anything. So let's see here. E-commerce segment revenue grew 33% year over year, strong in Brazil and Asia. Digital financial services revenue increased 70% year over year, supported by loan book expansion and growth in Brazil. Digital entertainment bookings rose 23%, driven by Free Fire partnership. Cool. But they're down 9%. Okay. SWBI. So this is Smith and Wesson, I believe, or Smith and Wesson, I believe. SWBI. So they sell squirt, or I don't want to say the real squirt guns. Or sadly, the stock is the same price that it was back in 2006. This is more of like a political catalyst play. Like whenever there's more or less enforcements of laws around this asset class. Look at the stock has not done too good this past year. Let's go check out their numbers. So here's what I mean by, if we go to their net income, it's not like, I wouldn't trust anything meaningful in this stock. Like these are too choppy of numbers to really trust, like to put meaningful amount of money in this name. Like they're only making a couple mil a quarter. They lost money this quarter, but this is what you're waiting for. Look at what happened in 2022 and 2021 when the laws were eased, or I don't know, something like that, or everyone was, I don't know what exactly, but they were printing money back here, 70, 80 million a quarter. But now the profits, the net income has collapsed, for the past year. They're lucky to make, 10 mil a quarter. So, there was another play around that industry, but I cannot remember the ticker symbol for the life of me. Feel bad. Hey, what up, Devish? What up, dude? He said Pinterest. Does InnoData have good fundamentals? I think so. I think so, Paul. I've actually made a bunch of YouTube videos about InnoData if you want to check that out. Best way to support me is just subscribe to my YouTube channel, by the way. Hit the like button. By the way, I'm streaming on YouTube and TikTok. So best way to support me is just subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. You can just type into YouTube, Nathan Robert. And I'm streaming on there too. If you miss anything, you're able to rewind it, replay it. Sometimes I talk too fast. Sorry. So let's look up Pinterest right here. The kind of like that social media website. Pinterest is the same price as they were when they IPO'd in 2019. Let's go see what happens here. This is a big cash play. Here's a cool metric. Their active users, monthly active users of 600 million, up 3.8% year over year. Advertising revenue grew with a 54% increase in ad impressions, though pricing declined 24% due to higher inventory, impacting overall ad revenue. User engagement expanded significantly with monthly active users reaching over 600 mil. Yeah. So here's the actual interesting thing. If we go to their operating profit, it should be negative. You're going to find this fascinating. This is the real value here. Actually, it just went. This is great news. But if we look at last quarter and the two last quarters, the core business lost money. But on net income, it says they made money. They made net income. How is that possible? Well, this company has no debt whatsoever, completely debt-free, and $2.67 billion of cash. So a huge chunk of their market cap is just their cash on hand. And that $2.67 billion of cash isn't just sitting there doing nothing. They said they're putting their money in these 1 to 3 week treasury bills, and it makes them every quarter $28 million of interest on their cash. So that's how, when they lost $4 million of operating profit, they actually made 30 mil of net income for adding that back in. So yeah, the free cash flow is really good, but I wonder what the moat is here. I like Reddit stock. I think Reddit will be more growthy. I do own Reddit, but I don't know. They're interesting. Hey, what up, Bobby? Where you been? Hey, I've been, we're back now. My bad. Can you check out CTM, please? Yeah, let's do CTM. What site are you using? Hey, what up, Brad? Yeah, hey, by the way, this is actually it's a brokerage where you buy stocks on. It's actually in the link tree in my bio, that very first link there. They ask for a bunch of information and stuff because it's a brokerage. So yeah, if you're interested in buying stocks and you need a brokerage, check this one out. It's called Moomoo. You can just type it into Google. Broker called Moomoo. Link tree in my bio. First link there. It's also an affiliate link. So if you go and deposit $100, we'll both get some free stocks. So yeah, that's my favorite brokerage. I have all these other brokerages too. Also, I'm not sure which one you're talking about. Maybe you're talking about one of these. These two are also linked in the link tree in my bio. But I like this one the most because it has the best analysis tools and it's free, costs nothing, no commissions either, zero fees. Like, so that's what I love about this one. All right, so let's see here. Oh, hey, what up, Isaiah? He said mRNA stock, and then we'll get to CTM after. Oh, I just forgot. We'll get to CTM after this one. KVU, hey, we'll look at KVU as well. That they're the Tylenol people. Tylenol stock, which is been in the news. So here's mRNA. This is Moderna. Do they pay a dividend? No dividend on this company. Yeah, so look at this. Most of the revenue comes from their COVID vaccines. And as we know, COVID is kind of gone. So if we go to the revenue, when there was COVID 2022, look at the money they were printing, 4 to 7 billion of revenue. But now that it's gone, if we go to the revenue, these year-over-year declines are terrible. Down 45% year-over-year, down 42, down 35, down 65, and they're not just the sales are declining, but they're losing a bunch of money as well. They've lost a couple $100 million, or well, if you average it out here, they're losing like $500 million plus of net income a quarter. So, and whenever you lose net income, the money has to come from somewhere. So notice how their assets are just declining every quarter while the liabilities are staying the same. So I would just be careful. Nothing's really blowing me away there. Just the fact that they lose money every quarter and the sales growth is gone. I'd probably rather pick a Pfizer because you get the dividend with that one. CTM here. Wait, CTM stock. So this is Castellum or something. I don't know. I haven't heard of this one. They're only worth 111 million. So be careful of the market cap that they're only worth 111 million dollars. What do they do? Delivery in products and service in areas of information technology and electronic warfare. Wait, what? Wait. Let's see what this company, or let's check out their website. Oh, cybersecurity is what they said. Leveraging power of nations' national security challenges, provide U.S. government and commercial cybersecurity stuff. Anyway, that sounds interesting. Maybe the government's a big portion of their revenue. Do they have sales? They do. They have 15 million of revenue, and wait, is that real? They actually made net income on that. Like that's not like that's real profit. They made 400K of net income this quarter. That's if they can do that every quarter. What are analysts expecting? There is no analyst expectations, probably because they're so small and only worth 100 million. But think about this. If they're worth 111 million, I normally don't like these kind of companies. They're only worth 100 mil, but I want to buy the company that's worth 100 mil that's making $1 million a quarter or a couple mil every quarter. Hey, here's a cool stock, kind of a Starbucks competitor. Starbucks stock is doing terrible, but Dutch Bros, I think, is a better way to get exposure to that industry, kind of like the people wanting a beverage now industry, or I don't know, the QSR industry, but check this. I like McDonald's, but this one's done way better than Starbucks. Check out the company operated shops. That's up 27%, after grew 30, after grew 37, after grew 67. So the company operated shops are doing good. They also have some franchising revenue. So if you go spend like $100 at any of one of their franchises, they collect like $4 or $5 of that. Let's see if the earnings hub has anything to say here. Probably not, because they're a small company. Yeah. Let's see. And they're net income positive too. This is the good news. Their margins are improving, better margins than Starbucks right now. These year-over-year growth rates are phenomenal. 20 to 40 million in net income a quarter. Sales are up 25 after 28. So interesting. I want to have it as a huge size position, especially right now in this environment. I'd be slow to buy the dip on them. Like, look at Chipotle right here. Like, if Chipotle's struggling, I mean, the whole industry must be struggling, and it is. There's Chipotle stock, that very bad looking. There's Cava, which is like a Chipotle smaller version of them. Look at them, all-time low. Wendy's, like even Wendy's. Look at this stock. So it's we're seeing the consumer really, or it might just be a whole combination of things. Consumer doesn't want to pay the overpriced fast food prices, and maybe more people are on Ozempic, not buying that stuff, and want to be more healthy, or I don't know, but the industry's struggling. Duolingo, please. Hey, Mr. Powell, what up, dude? DUOL. And Data Vault, we'll do that one next. DVLT. So PGY, we'll do that one out. Is it being debt-free a good thing? I agree. Some people say for certain companies it is, if they're in certain situations, because certain situations, it's smart to take on debt to pursue a business endeavor that could bring in that would net make more than the loan. All right. Anywho, here's Duolingo right here. I'd buy the dip on this one, not financial advice, but not with the meaningful amount of money. So I'd nibble on this company right here. They beat on every metric. It was a triple beat quarter. I don't know why they fell. I think it's just like AI sentiment or something, like because OpenAI and Google are making competing products and maybe that'll take away subscribers, but their subscription revenue, like their subscribers grew, but look at their total subscription revenue. This is 2025 Q3. Like this is what makes me so bullish on Duolingo. Like this is why I wouldn't panic as an investor. I wouldn't be concerned. If the numbers were bad, I would be concerned. But look, they're not. They're great. The subscription revenue grew 45%. After grew 48. After grew 46. After grew 49. Like the growth rate is nuts. And if you don't pay for their subscription, you see a bunch of ads on their app. My brother uses Duolingo. The advertising revenue, you're not going to believe the growth. Oh, yeah, we got to look at Webull after this. Their advertising revenue grew 45% year over year. So phenomenal growth on both businesses there. This is the first seeing the app being used. How so far does it differ from others? Well, it differs from others because it's the most useful. I have also Webull. I have Robinhood as well. But yeah, that brokerage, Moomoo, if you want to get this brokerage, link to my bio first link there, is the most useful one by far. But yeah, growth, everything here is still headed in the right direction. They had a little one-time adjustment to their net income. When you exclude this one-time adjustment, the business profits grew 160% year over year. So Duolingo's a beast, beating on every expectation every quarter. They beat on EPS, they beat on EBITDA and on revenue by a good margin. The PE is now a 20. Well, the PE isn't a 24. It's probably like a 30 because that PE includes this one-time adjustment, which made their EPS spike up to $6 this quarter, but it wasn't. It was more like $1. But okay. Ooh, thoughts on? I'm so behind. I said I get to Data Vault, but I don't. Santos said Apple. I want to get to Apple, and then I want to get to. Okay, and then we'll get to Webull because actually we've already looked at Webull like 3 times, so maybe we'll look at that one last. But yeah, Webull, I'm really bullish on them. Actually, if you want to, my most recent YouTube video, I just made it yesterday. If you want to support me, my most recent YouTube video is I style it just like this. It's on my phone. I do a whole deep dive analysis into Webull stock on my YouTube channel. That's my most recent YouTube video. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. But that's the best way to support me is just sub to my YouTube channel, watch the video, go leave a comment, say you came from TikTok or something. By the way, I sell nothing. I literally have no course, book, WhatsApp. I'll never follow you, never DM you, nothing like that. So anyway, let's look at the AI earnings hub for what Apple earnings. So iPhone, subscription revenue or service revenue growth. Or, let me not read that. Here's what's so crazy about Apple. The iPhone is literally half of their revenue. So 50% of all their revenue comes from the iPhone. And then the best and the highest, the most valuable part of Apple is actually their services revenue. So whenever you go spend like $100 in the App Store, Apple keeps $30 of that. They take a $30 royalty, basically, service fee. So this services revenue is super high margin. So, that has their iCloud revenue and stuff too. But then they have the wearable sales, the Mac, the iPad. Here's also why they were really affected by tariffs. There was a lot of noise back here because did you know only 36% of Apple's total revenue comes from the U.S.? So yeah, they're headquartered in the U.S., but 60% of the revenue comes from outside the US. Europe is 26%, China is 15%. That's interesting. We don't allow Chinese phones in the US because it's all spyware. But Apple phones are so safe that the Chinese regulators allowed Apple, even in court cases, the government's like, dude, there has to be some back door. We need to get the data from this phone. And Apple's like, we can't even do that ourselves. Like iPhones are like the safest phones. So I'm on an Apple device right now. A lot of people are locked in the Apple ecosystem. They're making, 25 to 30 bill of after-tax net income a quarter. They actually have the largest buyback program of any stock on the planet. You're not going to believe this when I say it, but Apple spends $22 billion of their after-tax net income every quarter solely buying back their own shares. Literally, they spend $100 billion a year on share buybacks. That's what's led to a lot of stock price appreciation. It makes the EPS go up, makes the PE ratio go down, gives you more ownership in the company, makes the cost of the dividend go down. I love Apple. Oh yeah, they make their own smartphone chips as well. Their smartphone chip market share is 14%. They're starting to. This happened a couple of years ago. They're no longer using the Intel chips. All the older iPhones used to all have Intel chips. Now they have their own chip that they partner with Broadcom with. And Okay. Hey, I'm just wondering what makes you diversify your portfolio into different brokerages? Hey, yeah, there's no benefit of that because they're even if I put it all in one, it's 250K, but it's just psychological for me. There's no burden of having multiple apps and multiple brokerage. It's just an extra filled out sheet of paper, 1099 you get at the end of the year that you just mail over to the IRS. So there's just no burden. So it's kind of a psychological thing. This stock, this account, if you look in the top left, this is called my dividend only account where every stock in here pays a dividend. All those stocks are also in the S&P 500. This one's called my buy and never sell portfolio because once I buy a stock in here, I legit try and never sell it. Even though I'm up 4x on this stock, I'm not going to sell any shares. Like that's the reason we're doing so good in this portfolio because we didn't sell before today. And I've definitely made that mistake before. Like check this out, like Robinhood, we're up 850%. We only own 5 shares left. We used to own like 50 plus more, but we sold almost like my biggest regrets are selling out of great companies or trimming or selling most of my positions out of great high. Same with SoFi. Man, do I like SoFi, Robinhood, like there's a lot of stocks I regret selling. So that's why we're experimenting. Okay, let's keep going here. INDI, please. Let's do it. INDI Semiconductors. So let's check it out. They're very small. They're only worth $900 million. Where are they? Where's the revenue come from? So China is 45% of the revenue. US is 17. Europe is 17. So they design, develop, and manufacture a broad range of integrated circuits. Oh, the analyst actually had some growth, I think, expected. So the revenue is supposed to be 60 million in 2 quarters. And the net income losses are supposed to narrow because they are losing 40. Ooh, that's the bad news. They're losing 40 million of net income a quarter, and the whole company is worth 900 mil. So they're losing 120 million. So they're losing 15% of the market cap a year at this. They really need to narrow those losses quickly and probably grow faster. I don't know if the risk reward looks too great on that one. They didn't have enough growth and they're losing too much money for me. Let's look at AGX right here. Wait, the algorithm sent me, I heard some AI talk happening. Guess I knew I'd fit in. Hey, what up, Ali? Good to see ya. So could you check out NOW? Yeah, we can look at ServiceNow too. So here's AGX. Thoughts on SoftBank completely selling out of NVIDIA? Oh, that's no big deal because it doesn't change NVIDIA's operations. I hear that all the time. That's like when Jeff Bezos sells his shares. Like 2 years ago, Jeff Bezos sold like 50 mil of shares. People were freaking out, but it's like way higher now. It's all short-term FUD. You know what FUD stands for? Fear, uncertainty, doubt. Okay, actually, I don't say that word enough. But here's AGX. They're worth 4.7 billion. They're at an all-time high. Yo, congrats if you own this name because you got to be up, or you are up on your position. There's no way you're not. So Power Services, that's such in demand right here. Yeah, look at these year-over-year growth rates in the middle. Like 40, 60, 70, 60, 50, 30. So that's probably what's led to a lot of the growth. Industrial services, that's actually down 27% year over year. Let's see. Yeah, wow. So the revenue growth slowed down. The revenue is only up 4. So revenue's up 4, but the net income grew by 93, which means they're growing margins. Yeah, 15% net margin. Was that real? So 35 mil in net income. Yeah, so that was real. Good balance sheet too. So free cash flow. So actually, they're beating on expectations. Look at that. Analysts only expected $1.60 of EPS. That probably explains why the stock gaps up so aggressively on earnings every time. The huge beat on their bottom line, their EPS number. Analysts expected $1.60. They beat almost by double. Crazy. Okay. Hey there. What up? Oh yeah. Hey, what up, Vasistia? Hey, by the way, this is actually a brokerage. If you want to get this software I'm on, it's in the link tree in my bio. That very first link there. Is this your original account? Yes. Pocket Kratos. By the way, this is my only account. But yeah, hey, watch out for people impersonating me. This is my only account. Nathan_Robert. I'll never follow you or DM you. Yeah, someone was saying earlier, was that you that DM me? No, I'll never DM you. I'll never follow you. If you follow me, I very much appreciate that. Thank you so much for following me. You might get followed by someone impersonating to be me. Just know I'll never follow you or DM you. Not in a mean way. I won't follow you. But okay. HALO. The only thing I do have is a YouTube channel. So if you want to support me, check out the YouTube channel. So Okay, so CoreWeave. We got to get to CoreWeave too. So okay, CoreWeave next for sure. So here's HALO. They're actually on my watch list. If you look at the stock, they're at nearly an all-time high. So yeah, congrats if you own this name. Let's see what they do. I forget what they do, but they're on my watch list. Research, development, and commercialization of our proprietary enzymes and devices. So it looks like some therapeutics company. As we know, I'm ignoring the industry. I don't love the therapeutics, or I ignore the industry because they can be in any industry. I don't care as long as the numbers are good. And the numbers are good here. Like, check this out. The revenue's up 22 after it grew 35. And not just the sales that are growing, but the bottom line. What's that net margin? Whoa, 50% net margins. 85% gross margins. That's insane. So they made 175 mil in net income. That's after paying, 50 mil of taxes. That's insane. It's the money they keep to their bottom line. That's the best part. So 50% net margins. So anytime they sell one of their products. So whenever you go spend $100 on their prescription, whatever, I don't know what they sell, but they keep $50 of that after paying taxes. So looks like there was they beat on net income this quarter, met right at the expectations. So actually, I really like Halo. That's why they're on my watch list too. Will you post this live later? I've missed part of it. Yeah, so every time this stream ends, it's on my YouTube channel. I don't take it down after. So yeah, sometimes, if you ever want to replay anything, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, just type into YouTube Nathan Robert. Yeah, I'm streaming on YouTube and TikTok right now. Yeah, but yeah, thanks to everyone on the YouTube stream. Yeah, best way to support me is sub to the YouTube. My toe in the water portfolio is becoming so diverse, I might as well have just bought the S&P. Yeah, hey, that's what some people say, like, don't diversify or whatever, like don't own, because I've looked at the bell curve chart, like once you get over like 30 stocks or something, like you almost identically follow the S&P 500. But let's look at the CoreWeave right here. So yeah, I saw like 4 people asking about CoreWeave. Let's do it. So they reported earnings this morning. I'll be quick about this one because you've already looked at them a couple of times, but after looking at them, I actually really like their numbers. They were really good. They just reported that they didn't have enough workers to keep up with the demand and to build out infrastructure. So there's like going to be a slower future revenue growth because of that. They won't gain it as fast. But check out the growth of the right now revenue growth is insane. Triple digits every quarter for the past 4 quarters. Revenue went from 500 mil to 1.4 billion. They are still losing about 100 to 300 mil in net income a quarter. That's what I don't love, the fact that they burn through a lot of money. But as long as they can keep up this growth rate, and analysts are expecting that, I think they're going to be all right. Check this out. Analysts are expecting 2.5 billion in revenue in 2 quarters. They actually lost less net income than expected. That's great news. Wow, EBITDA is supposed to, or EBIT, earnings before interest and taxes. I actually like this number. It's just earnings before interest and taxes. Very simple. It's supposed to be 450 mil. So there you go. Yeah, if a company has a bunch of debt and they pay interest on it, it's not included in there. But also, if they make a bunch of interest on their cash, like a lot of my companies are, it's not included in that either. Okay. Wait. SUBCY. What is? Hopefully I can find that one. SUBCY. So this is Subsea something. Subsea 7. They're not a US company. They're an ADR. So where are they headquartered? Norway, Brazil, UK, US, Taiwan. So look at that. They're very diversified. Subsea and conventional. So I wonder what this company does. Let's go figure it out. Offshore drilling services. So it looks like an oil and gas company or something like that, where there's some oil and gas projects or renewables revenue. Let's check out the net income. Let's see how much they're making. So yeah, they are making net income every single quarter. These year-over-year growth rates are good. So they're making it like 50, 60 mil in net income a quarter. Not too shabby. So do they have a dividend? 4.4% dividend. It's an ADR. If you could hold one stock, what would it be? Microsoft or McDonald's. All right, it's probably. I picked the S&P 500, but that's not a stock. Circle, do you think the lockup will be oversold? So yeah, every time a company IPOs, the executives, there's this lockup where they can't sell their shares for like a certain amount of time. And on December 2nd, that lockup ends and they're able to sell their shares. So normally whenever that happens, the order book just gets flooded with sell orders, and historically always just dumps the stock for the insiders to finally get their profits. But yeah, here's Circle right here. This is your stablecoin play. This is the company that owns and operates USDC. If anyone's heard of that stablecoin before, USDC. So it's actually a pretty niche play, and they're actually making. This was their IPO fee they had this quarter. So it kind of ignored the $40 million one-time adjustment there. But the previous quarter, 65 million net income, 33 mil, 50 million net income. So before that, they're actually making net income every quarter, which is good news. The free cash flow this quarter was 233 mil. Let's see what the earnings hub has to say. I'm actually curious if they have anything. Revenue growth is driven by expanding USDC circulation, Circle Payment Network, Arc Blockchain. And here's what the analysts are expecting in 2025 Q4, 700 mil. And yeah, expected to go EPS positive, $1. So again, one-time adjustments because of the IPO fee, but yeah, they're supposed to go EPS or net income positive for the rest of the time. I actually really like Circle. I put them on the watch list. I don't know if I'd buy yet. I still will probably wait for the lockups. Who knows? How do you feel about quantum stocks? I don't love any. I've looked at all the quantum stocks and none of them are really good. The small ones they're just way too risky and overvalued, like the qubits, the RGTIs, all those. But the best quantum names, first off, Google and Microsoft. Like you get exposure to so much stuff you don't even realize through like these big names. But Google probably has the best quantum computer in the world. Microsoft's up there, and Honeywell as well, probably top 5 best quantum play of all time. Honeywell and what's the other one? It doesn't matter. But okay, yeah, let's see. The Trade Desk TTD. I'm actually curious to check out the Trade Desk. This is the company that's losing to Amazon, Roku, a lot of customers. Like for example, they lost Netflix, which was sad. Netflix used to use the Trade Desk to find advertisers, but now Netflix uses Amazon Roku partnership now. Amazon and Roku have like a big thing. But let's see here. U.S. streaming services reached 91% house penetration. Let's go see what their actual earnings hub was, or the AI results. So revenue growth is fueled by accelerated adoption of AI platform. They're leader in the connected TV. They're the number one CTV advertising play. Profitability improved. Net income was up 23%. Free cash flow declined 33% due to strategic investments, though. Let's see. So they did beat on revenue. They beat on EPS and they beat on EBITDA. So it was a triple beat quarter. But I think it's just the sentiment around this name and the fact that they're a super high multiple company. Like even after this crazy dip that they've had, they still trade at 50 times net income. So that's more expensive than Netflix. And I think Netflix might CAGR their net income faster. But I don't know. They still make good money. If you average it out here, they're making like 100 mil of net income a quarter. At this growth rate, what's it going to be this same time next year? So interesting advertising company, but it still might not be time to buy the dip on them yet because the PE is still too high. Like it maybe could like still go lower. So that's the bad news. And if advertising the economy slows down, like Meta, hey, yo, shout out to the homie label. Thank you so much for the coffee. Yo, Maddie, I think was the original name. Maddie, yo, for the 25 Ron. Thank you so much, man. I hope you're having a great Tuesday. Thank you so much, man. He said coffee. I need some coffee. I've been streaming for I don't even know I was going this long. 2 hours and 11 minutes. Yo, if you want to hit the follow button, we stream every day. Yo, Northern Jays, shout out him. You said Meta stock. Let's do Meta too. But yo, thanks for the 25 Ron. I appreciate that. I'll definitely get some coffee later. I got actually I went to McDonald's this morning before college, and there's like this McDonald's Chips Ahoy coffee thing, and it was so good. I didn't believe it because McDonald's has a long partnership with Mondelez. Actually, that's such a cool company. The people who own Chips Ahoy, that's MDLZ, Mondelez or Mondelez, I think is how it's pronounced. This is one of my favorite food stocks out there. Like better than Hershey's by far. They have a 3.35% dividend yield. It's a food stock. They own Toblerone. Cadbury, like all the best brands, like quality, super quality name here. Okay, wait, let's get to Meta stock right here. And then we'll get to, is Perry your biggest loss in your holding? No, not my biggest loss ever. That would probably be ChargePoint. So let's look at Meta right here. This is the cheapest Max 7 play. Yo, shout out to the homie Luca for all the confetti. Yo, thanks so much, Luca. I really appreciate that. If you got another stock you're looking at, let me know there, Luca. And yo, Dr. One Fly, thanks for all the gifts there. You too. Um, what app? Yeah, hey, if you want to get this app, I'm on the link tree in my bio, very first link there. Hey, what's up, man? So here's Meta right here. I think legit super. Oh, wait, was it Michael Burry that shorted this company? Michael Burry alleges Meta's earnings inflation through depreciation practices. So he's kind of right, but not yet. So they think that like here's kind of what's happening. If you buy a Blackwell chip right now, if you buy a Blackwell chip right now for, I don't know what it costs, but let's say $1,000, in 8 years from now or in 8 to 10 years from now, the value of it is quite literally like zero. And how they're doing their depreciation and stuff doesn't matter to me, but let's check this out right here. They have like some people were saying like, do you not think the big accounting firms already know this? Or I don't, whatever. But check this out. Their active users, they literally have 3.54 billion daily active users. So pretty much half the world is on one of their apps a day. First ever $50 billion quarter, but they had a one-time tax adjustment from the beautiful bill thing that costed them, literally one-time adjustment. It was $15 billion. They actually made a record 20 bill profit for that quarter. A really good balance sheet. Cash from operations was 30 billion. Here's the one thing investors also don't love about Meta is how much they're spending in AI. You can tell by going for their cash from investing activities. You know, if they acquire assets, buy chips, buy land, whatever, that this will be negative. If the number's positive, that means they're actively selling their assets. So you want this to be negative, but investors are worried. Like they're spending 25, 21 billion a quarter. It used to be safe, 5, 6 bill a quarter. That was even on the metaverse spend. They were worried about the metaverse spend, but now it's like the AI spend. So, but Meta can afford it. That's the thing. They legit make 20 bill in net income a quarter. No net debt. They make so much interest on their cash. They just collect money from all these other countries who use Meta apps. They're introducing ads to WhatsApp. Oh, they're making the new Meta Ray-Bans. Has anyone heard of or they already made them, the new Meta Ray-Bans, Meta Oakley, where you can like scroll through Instagram and WhatsApp on the glasses. Kind of cool. Hey, thanks, Luca, one of the honest investors. Hey, thanks. I really appreciate that, Luca. Yeah, if y'all want to help me out or support me, hit the follow button. We stream every day. I sell nothing. I have no course, book, nothing like that. Hey, let's see here. Professor Pumpkin said WEGZY. I've not heard of this one before. They've had a nice little rally these past couple of weeks here. Let's go check it out. So it's a Brazilian company. Or we'll convert the currency we'll convert it to USD. So what's the net income? So this is actually great. And this is in USD as well. They're making 200 to 300 million of after-tax net income every quarter. Yeah, that's after they paid 60 mil of taxes. That's actually really good. I mean, the growth rate of the sales are slowing, or I guess 6%, 0.7, but which slightly missed on expectations. The momentum's crazy. Now, they make good net income every quarter. Exterior, I wonder what exactly they do. It might be some real estate related company. Generators and transformers, gear units, geared motors, probably from the AI demand, they'll benefit. CoreWeave and TTD, you're getting hammered. Yeah, no kidding. Yeah. MP materials. Let's do MP materials right here. This is your rare earth mineral play. The U.S. government, it's like the main one. The U.S. government took a 10% stake in MP materials. The reason they're well off their $100 peak is because of the tensions has de-escalated. So one of the reasons they went up so much is because China made out of nowhere, and like a month ago, made a crazy extra hard permitting process for you to buy rare earth minerals from China, like whatever, rare earth mineral. So the U.S. government took a 10% stake in MP Materials. They bought like LAC America. And so they're actually opening up this one rare earth mineral mine that's going to supply the U.S. for the next 50 years with certain rare earth minerals. And probably just the de-escalating tensions between the U.S. and China is why the momentum is kind of fading. They are pretty overvalued, but check out the future revenue growth that's expected. Next quarter, the revenue is supposed to it's going to go from 50 mil to 100 mil, 116. So they already set their prices. They already got a customer where they're set to buy prices. It was at $40 to $50 a pound of this certain thing. I was looking into it anyway. That's probably the most quality rare earth mineral play out there. Um, but it's a tough buy here with meaningful. I want to have a meaningful amount of money in them. I don't own them. Hey, what up, Leeds? He said WVVI stock. So this is William Annette Valley Vineyards. So they're a very small company. We don't normally look at these kind of stocks, but yeah, they're only worth $12 million. That stinks. They're only worth $12 million. Do they have revenue? Yeah, so the revenue is $10 million. It fell 1% year over year, and they don't make any money, or they made $900K of profit, but then they lost $700K, made $400K, but then they lost. So it's just like a choppy one to really own. Let's see right here. Looks like they sell wine, I'm guessing here. We can check out their website right here. Oh, actually, I don't know if I can because of this industry. We might get in trouble for that. Um, Wait, purchase these shares. What? Wait, what are they proposing here? Uh, Purchase shares at $3.95 through December and receive an annual dividend of 5.5. They're doing anything to get people to buy the stock. Yeah, I don't know about this one. I don't know about, they can't pay a dividend. Or okay, let's see here. Label, what up? Hey, thanks again for the 25 Ron there. Hope you're having a great Tuesday. I checked out Maddie, or maybe that was your name. Yo, Maddie, yo, I could not, or that was your name. That wasn't the ticker symbol. Thanks again, Label. NBIS, harsh sell-off, strong buy sentiment. So Nebius is probably falling because of CoreWeave. You know, they're both actually owned by NVIDIA. If we go to the NVIDIA portfolio right here, their largest holding is CoreWeave. They're down 16%. Again, that's CoreWeave, APLD, Nebius. They all do pretty much the exact same thing. These data center server hosting, and a big chunk now. The Microsoft Cloud is going over to Nebius. Nebius also just got a $3 billion deal with Meta. So some cloud computing from Meta is going to Nebius, which is great news. Let's actually see the earnings preview here. Wait, when did they report earnings? Or maybe they're not out yet. They're out. Revenue declined 5.8% quarter over quarter due to timing delays of scaling GPU. The $3 billion Meta partnership reinforces Nebius' position in AI. Yeah, that's not recent. But what I've always loved about Nebius is how growthy they are even before the deal. Check this out. The revenue went from 14 mil to 100 million. So it's 100 million this quarter. If we go to what the analysts are expecting, they're expecting 300 million in 2 quarters. So the revenue is going to 3x. It's already at a max record right now, but it's going to 3x again. It's just crazy. So I'd put them on the watch list. Maybe not buy the dip yet. Maybe nibble on them, but if CoreWeave is having a cold, everyone else is sneezing, because CoreWeave is like the biggest player there. Hey, what up, Luke? He said UAMY. Let's check it out. Oracle, please. Yeah, hey, Oracle's a big cloud play. That's like a pure cloud play. I have my cloud play. You could buy so much of like the Mag 7 market cap growth has come from cloud businesses. Microsoft Azure Cloud does over 100 billion of just the cloud business for Microsoft does over 100 billion of revenue a year for them. For Amazon, it's over 120 billion of annual revenue, their cloud business. The Google Cloud is so huge, and they all have high margins on that kind of stuff. Oh my goodness. Okay. We're back. TikTok just made me fill out a CAPTCHA because they thought I was AFK. Oh, we're back. Okay. We've been streaming for 2 hours and 30 minutes. Hit the like button if you want to hit the follow button. But here's UAMY. This is another kind of just rare earth mineral momentum play. They own like these specific like zeolites. I've never heard of that before, but there's these certain rare earth minerals. See if we can look at their website. I don't know. Antimony, zeolites, semiconductor. Like basically, it's just another rare earth mineral play. I don't think they have any revenue yet. They have a mine, but if we go, or no, they do have revenue. Actually, I'm wrong there. Check that out. 10 million of revenue this quarter. That's great news. And wait, and they're actually, I'm gonna actually add them back to the top of the watch list. Or well, as just a watch for now. They actually are profitable. They're making money on the 10 million of revenue. So if this growth rate continues, that's going to just scale higher. Plus a fortress balance sheet. All those things combined, good growth, no debt. That's a really good balance sheet. So interesting. SoFi. Oh, let's do SoFi. Oh, I was supposed to look at SoFi like an hour ago, and I just never got to it. SoFi is phenomenal. Oh, hey, we'll look at TTWO and DVLT. Oh, we'll look at DVLT next. Sadly, I don't have anything good to say about DVLT. So SoFi Technologies right here. I do own this one. Actually, I'll show you this right here in my Webull portfolio. This is a stock I regret every share I've ever sold off, but we're up over 5x on SoFi. Robinhood's another one I regret every share I've sold off. Is anything green on the day? Disney's green. So that's cool. But yeah, here's SoFi. This stock isn't just propped up on momentum. They have real good fundamentals. If we go to their financial services revenue specifically, which is now 43% of all the revenue, check out the growth. This is what's crazy and justifies the high multiple. No analyst were expecting this. The revenue's up 105, after grew 80, after grew 250, after grew 280. Like, that's insane. And here's what the analyst actually expected. That's the orange line. They beat on revenue every quarter. They beat on EPS every quarter, which is net income, and they beat on EBITDA every quarter. So no wonder they're gapping up on earnings day every time. I just think people are really taking SoFi serious. They're making 100 mil plus in net income a quarter. So phenomenal. Hey, JOJONY, Jajoni, or hey, thanks for the gift there, the rose. I appreciate that. Hey, what up, EINs? EINs, I'm probably saying that wrong, but what's up? When does IREN become viable? Ooh, probably not for a while. IREN's another one that's kind of just like Nebius and these other names. So what was it? DVLT. Let's do this one real quick. And then we'll get to GTA 6. So DVLT... I think this is just another kind of AI momentum company. So check that out at the top. Let's actually click this right here. Projects full year 2026 revenue of 40 to 50 million, driven by acoustic and data science division. So a 50 mil of revenue for the full year 2026. The whole company is worth 415 million. They didn't give projections on the net income. Ooh, that's rough. So remember, kind of think about this logically. The whole company is worth 412 million. The whole company is worth 400 million, and they lost 40 million just this quarter in net income. So that means they lost 10% of the entire company just this quarter, and you add up all the other companies. So they really need to narrow these losses way faster. And they just now got some real sales. So $1 million of revenue this quarter, but that 50 million projection is good. Can you help me? When I set a trade, it stays at 0. And when I set the stop loss, wait, what platform are you using there, Led? I'm not sure. I wish I could help you there. I can't specifically help you there. I'd reach out to your support on your brokerage. Let's see here. I was having an issue with my brokerage, screencasting issue, and I was using the Google Gemini, where you can talk to it and it talks to you back. I was talking to it like I would a human, and you can leave the Gemini app and it'll still talk to you as you're going through the issue. And I'm like, all right, so I'm in the settings here. Now, what'd you say to go on? It was actually really helpful. Okay. Let's look at TTW. Oh yeah, Take-Two. This is the GTA. This is the company that owns GTA. So if you heard of GTA 5, GTA 6 is actually about to come out. Actually, I just lied because they just delayed it. The reason the stock tanked is because they delayed GTA 6's release. We're cooked till November 2026. So we got a whole nother year. Exactly a year till we get GTA 6. They rug pulled us again. Take-Two and NBA launch revamped 2K League. Oh yeah, they own some other games as well. They own Red Dead Redemption, sales milestones. But basically the reason the stock is at all-time highs before today and has really run up is because they're in such a unique position where they have this game they're about to release. They have this asset that whenever they release it, it's literally going to bring them in billions of revenue. So that's kind of the future catalyst, but we got to wait a year for it. So there you go. I would put them on the watch list. I think a lot of it's priced in now. But hey, Levi, what up? He said, what app is this? Yeah, hey, but this is a brokerage, it's software where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. Let's check out let's look at NXXT. And then for sure, next we're going to get to Elf Beauty. Oh, Brian, what up, dude? He said, my worst buy decision still has to be the 20th century. Thank goodness for the stop loss. Hey, nice there. Hey, what up, 6 Star? InnoData. Ooh, we'll check them out. I think they're down like 10% on the day. So here's Next NRG. If you look in the top right, the market cap, they're only worth 200 million. That sucks. So they're worth 200 million and they're at an all-time low. I feel bad if you own this one, but mobile fueling services. Look at, for some reason, the EBITDA expectations, it's negative 2 million this quarter, but it's supposed to go negative 50 million in 2 quarters. But the revenue, so the EBITDA is supposed to tank, but the revenue is supposed to, triple. So it's an interesting dilemma here. Like, they have interesting revenue growth and revenue growth projections. They have a bit of a weird balance sheet, more liabilities than they have assets. They lost 36 million. What was the whole company worth? And the whole company's worth 220 million. So they lost over 15% of the market cap just this quarter in net income. I can kind of see why they're at all-time lows now. There might be some real bankruptcy risk there. GTA 6 will be a money printer. Yeah. That 12 Elf Beauty right here. So a lot of consumer stocks, or not even just like in this, like Target's doing terrible. Chipotle's doing terrible. Elf Beauty had Ulta Beauty. Well, let's check out their numbers right here because they actually went through this acquisition, but that acquisition like led to some of their growth. They like masked the core business. But check this, or I'll show you that first. If we go to their cash from investing activity, again, if you buy an asset, buy a company, this will be negative, or it'll result in a negative number. So they bought a company for $590 million. And that explains why that balance sheet, the assets went from 1.3 to 2.3. And but that also explains why the sales were actually slower growing than this. The revenue's up 14%. And some of that is from the acquisition helping. So I think they just missed on expectations. So the revenue grew by 14, but the net income was only 3 million. The net income was only 3 million. Again, might be related. Well, the operating profit was only 7 million. So it looks like their margins really are just non-existent right now, sadly. Oh, and they missed on their revenue expectations. Revenue expected was 265. They only did 343. So they missed on revenue, they missed on net income, and they missed on EBITDA slightly. So it was kind of a triple miss quarter. And, they probably are that whenever they lose net income or like that's going to crush the PE ratio, sadly. Hey, the homie Plasma is in the house. Let's check out SEZL. Yo, when do they report earnings? Let's go see. They trade at such a low multiple. Or no, they already reported earnings. Yo, not financial advice, guys. I would put this stock on the watch list. I didn't realize this. Dave, the other competitor, only trades at 19 times forward PE. Sezzle's current PE is a 17, and that's not propped up or propped. Yeah, that's not propped down, I should say. The PE ratio really is as low as a 17. And they're just as growth. I think they deserve a higher multiple than that. If we go to the revenue's up 67 after it grew 71. And on that, they're making net income every quarter, like 20 to 30 million in net income a quarter. They made 26 mil this quarter. That's after the 8 million of taxes they paid. Like, that's real profits they're making. Gross margins are crazy, 70% gross margins and then 20 to 30% net margins. So I really like Sezzle. And look at the deleverage that's happening here. If we look at the liabilities, they used to be 75% of their total assets. Now it's only 57. So I wouldn't have it as probably a crazy big size position, but I'd certainly buy a couple of shares of them here. What is this one? Beyond Meat. No, hey, I don't know about that one. AMD stock. Oh, you know what? We have not looked at AMD today. So honestly, I like AMD more than NVIDIA, but I don't like AMD here. Like, if you didn't already own AMD before this rally, it's tough. Actually, OpenAI is now ordering a bunch of AMD chips, and OpenAI also now owns 10% of AMD shares. Also, here's what's kind of circular and kind of funny. NVIDIA owns 100 billion of OpenAI, and OpenAI owns 10% of AMD. So kind of funnily, AMD or NVIDIA stock benefits from AMD going up. But I do own AMD, full disclosure. Sure, do that up here. They're our largest holding. We're up, or in this portfolio, we're up 92% on them. I just thought they were an easier double than NVIDIA. Still, it's not, the risk reward doesn't look great on it right now, but look at NVIDIA in the top right. The whole company of NVIDIA is worth 4.7 trillion. If you buy NVIDIA right now, for you to double your money, you have to be worth, nearly 10 trillion. But that's why I thought it was an easier double on the AMD because they're only worth 390 billion. Still, they're a bit over, they're a bit pricier. But yeah, big data center play, client and gaming revenue as well. But yeah, check out how they beat on their revenue every quarter. And with this new OpenAI deal and other stuff like that, the Oracle deal, OpenAI deal, I think it's going to go even higher. They make great net income, 1.25 billion net income they made this quarter. The revenue's up 35%, fortress balance sheet too, no net debt on AMD. So see if there's any AI news down here. AMD to present AI strategy and MI 400 series roadmap. Okay, cool. Can you explain what IPOs are? That's just when a company has their initial public offering. So that's how a stock converts to being private to going public on the stock market. So the IPO is basically the first day they go public. Ooh, Beatish, what up, dude? He said CTRE. This is a REIT, a healthcare senior housing care REIT. And this chart does not include the dividends because most of the dividends, most of the returns come from the dividend, but you get a 3.5% dividend yield. This is one of the best REITs I've actually ever seen. One of the most impressive ones. What other REIT has this kind of growth? The revenue is up 71%. It was up 63% last quarter, 53%. This is the best part about them is how under leveraged they are for a REIT. Most REITs are trading at 4 to 5x yearly AFFO or yearly EBITDA, but not them. They're trading like 1.2x, like so under leveraged. And check out the revenue. It's 132 million or 132 mil of revenue. 75 million of that was net income. Again, you don't really even focus on net income for REITs because the net margins are actually even higher than this. You actually focus on core FFO, but their net margin is this. They're a triple net lease senior housing care REIT. A REIT is a real estate investment trust, and their dividends are taxed differently. You pay a slightly higher tax bracket on their dividends than normal. What app is that? Yo, what up, Conte? Hey, this is actually a brokerage right here. It's software where you buy stocks on. If you wanted to get it, it's in the link tree in my bio. That very first link there. It's also an affiliate link. So if you go and deposit $100, we'll both get some free stocks. But yeah, free brokerage, costs nothing, no fees at all. That's what I love about them. And the best analysis tools. A lot of people like to keep their idle cash in here too. If you look at the middle of my screen, you get a 3.6% APY on your idle cash. Well, you're going to invest it in something. I just spent all my cash, so you can't. I used to make a lot more interest right here. I used to make, look at that, like 10 to 15 cents a day in interest, which, hey, not too shabby on idle cash. Okay, let's see here. Did I just unplug my mic? Okay, no, we're good. Okay, just sold my MU, looking to buy into CoreWeave and says, oh, hey, MU, I wouldn't have fully sold out of this. Well, actually, 32 PE. It is now they're expensive, or now they're a bit are, but yeah, they're kind of catching up to the competition of the norm PE. But yeah, I probably wouldn't have fully sold out of them. I would have trimmed it, but let's see. Super micro looking attractive sub 40. I don't love super micro computer, and I say that as a shareholder, and I'm up like a good chunk on them, and I want to see them do good. Where's my super micro? They're my third smallest position. Yeah, we only have $390 in super micro. We have 10 shares of them. Their margins are collapsing. You just increase competition from Dell. Revenue declined 15% year over year. Gross margins fell 0.19. Order pipeline exceeded 13 billion. Well, but check this out right here. This is the bad news, the thing I don't love about this stock right here. Why I would wait to buy the dip. I'd wait to buy the dip on Supermicro. The sales, the lifeblood of the company, the revenue is down 15%. It's a tough comp though, because last time you're looking at it's up 180% from the previous year. But revenue's down 15, but the net income is down by 60, which means the net margin has collapsed. They used to have, mid to high single digit margins, but now it's low single digit margins, 3, 2, 5. So I'm not too bullish on them, sadly, and I want to be. All right, we'll look at a few. I got to go here, actually, sadly. Dang, we almost, I don't normally stream for 3 hours. Time kind of flying by here. So, Joseph said GLD. I got a life hack for you. So a lot of people like GLD because it's literally the commodity of gold in an ETF. It's arguably in almost every way makes more sense to buy the ETF version of gold than physical gold. Uh, so you buy it via ticker symbol GLD, but I found one. It's run by Black. That one's run by Spider. This one's run by BlackRock. Ticker symbol IAU. This is the Gold iShares Trust. It's the exact same ETF, exact same thing, just with 15 basis point lower expense ratio. So you save $15 a year for every $1,000 you put in. So basically, what I'm trying to say is buy IAU over GLD because you save 15 bits, and it's the exact same. They've moved identically. Um. PLTY. Yeah, hey, there's no point of covering this. This is just looking at this just sells calls on Palantir. So we're basically just looking at the chart of Palantir while these managers have sold calls on it. So you basically buy this ETF to maximize your income, to maximize your dividend. Because if we go to their dividend, you get a 90% dividend yield. It pays monthly. The dividend will trend down by double digits every year. Yeah, you're not going to outperform Palantir or the market in the long run with this, but you do get a good dividend. Yeah, a 1.44% expense ratio fee. That's going to compound your losses quickly. Plus, if it's a return of capital ETF and if there's NAV erosion, which, those yield max ones are the worst at that, and the title trust ones. It's just slow bleed of your money, which is unfortunate. Just from what the numbers I've seen. URI or ELF, I would pick URI. I love United Rental stock. I'm totally biased because I'm a shareholder here, but I think this is a decent dip to buy. The PE is fair. What's the PE now? 22 times PE. Their specialty business has been growing nicely. With the Yak acquisition, they bought this company called Yak Mats, where it's their bet where certain governments are like forcing construction people to use these specialty mats and stuff. So specialty revenue is growing. This is the best part. This company makes legit 6 to 700 million of net income a quarter. What are they doing with that 6 to 700 million net income a quarter? Well, they pay a dividend, and the dividend only cost 115 mil. Used to cost 118 mil. Why'd the cost go down? Because they're doing share buybacks. They spent 600 million the most recent quarter on share buybacks, 400 mil, 300 mil, 400 mil. So here's what that does for you as a shareholder. If you go to the net income fell by 0.99% year over year, but the net income per share actually grew by 2%. Remember, the net income growth rate and the EPS growth rate should always be the exact same. Only thing that changes is the share part of the ratio. So that's why the EPS is growing faster than the net income, which makes the PE ratio go down, which makes the dividend cost less, give you more ownership. It forces the stock to go up. Hey, thanks so much for those gift there, Low Key. Said, what are your favorite ETFs? My favorite ETF, probably all time, is the NASDAQ 100. And a lot of people know the NASDAQ 100 via the ETF, ticker symbol QQQ. But here's the thing. It's the Invesco QQQ Trust. There's actually the QQQM ETF, which is literally the exact same thing, exact same NASDAQ 100 strategy run by the exact same people that has performed identical, but it has a 0.15% lower expense ratio fee. So you save $15 per 1K invested in yearly fees. Same NASDAQ 100 strategy, NVIDIA, Apple, Microsoft, Broadcom, Amazon. They just don't market this one. They're both owned by Invesco. What do you think Invesco is going to do? They're going to market the one that has double the expense ratio fee so they make more money. They're not going to market and advertise QQQM so people don't know about it. All right, hopefully that was helpful. That's just the NASDAQ 100 strategy. I'm just a fan of the NASDAQ 100 strategy. You can buy it through any index fund. Also, just the S&P 500 with ticker symbol VOO is the S&P 500. So those are my two favorite ETFs. If you legit just buy and never sell those two ETFs, you're already ahead of the 99%, because 99% can't outperform the S&P 500, and not just retail traders, but also hedge funds. They can't outperform the S&P 500. So that's why if you don't do this, it'll drive you crazy. You got to have at least some portion of your portfolio in the S&P or QQM. It should be the backbone of your portfolio, but I definitely keep it as a little chunk of the portfolio for sure. All right, we'll look at maybe one or we'll end it out with CoreWeave. CoreWeave is so popular today because CoreWeave just reported earnings. We'll be super quick about this one because you covered it like 5 times today. But yeah, the revenue, they beat on every metric, but they had bad guidance because they said they couldn't get enough workers to complete their construction and that work the data centers or whatever. So the future growth is slow, but the future growth slower than what it would have been, but the growth expectations are crazy good still. The revenue was 1.36 billion this quarter. It's expected to be 2.5 billion in 2 quarters. They also announced they signed a $3 billion deal with Meta. CoreWeave signs $1.17 infrastructure deal with VAST Data Center. Where's the oh wow, look at that. They reported Q3 revenue of 1.4 billion. Revenue backlog reached 55 billion, including 14 billion from Meta and 6.5 billion from OpenAI contracts. So like 30% of that backlog came this quarter from OpenAI and Meta. That's actually really interesting. That's going to lead to future growth. So basically, they don't have the supply to keep up with demand is what is the big issue here, because they do lose a bit. They lose a lot of money, but as long as they can keep up that growth, I think CoreWeave will kind of continue to win, and I think this will eventually be overlooked. Maybe NVIDIA will buy more shares. You know, NVIDIA is like one of the biggest shareholders. So pretty cool there. How to learn investing and trading in stocks, brother. I'm trying to learn, but I don't get it. Well, hey, this is where most people would say, like, go buy my course. Guys, I sell nothing. I wish I could help you out there and teach you, but I have no course book. I never will. That's kind of my thing on that. I don't want to sell anything ever. So the best way to learn from me is just watch my YouTube videos, watch my streams, and watch. I have YouTube videos where I go in depth on like how I fully analyze a stock. I had nothing. So I would just read books, do research, listen from smart people. Okay, so do you think PayPal is fair valued? PayPal, it honestly is fair valued. Let's actually check out PayPal right here. It's probably our last name here. PayPal, or maybe we'll do Astera Labs too. Yeah, Big Bear AI, I don't love that one. I've looked at them. Big Bear AI, I don't see any. Well, they have like one little contract. They're kind of just a momentum play, not too much. I wouldn't trust a lot of anything meaningful in that stock. Just from, maybe they're good. I don't remember. BBA might have been making operating profit. I don't remember. But here's PayPal. They're actually the same prices they were back in 2018. So you bought PayPal in 2018. It's the same price that it is today. And they don't pay a dividend. So this multiple might be fair. Like if we look at the PE ratio, they trade at 13 PE, nearly 14. That they deserved that valuation kind of before today. Like if we look at their sales growth, like it's low single digits, or before the most recent quarter, 5%. 1% growth, 4% growth. That doesn't really beat inflation that much. So, but the growth is finally back. And also another reason that propping up PayPal stock price and also making the PE ratio go lower is the buybacks they're doing. So they're making easily over $1 billion of net income a quarter. If we go to their share buyback program, this is what I love about PayPal. But I think investors have questioned this strategy and would have rather them done an acquisition. But they legit, if you look at the top here, they're spending $1.5 billion of their after-tax net income every quarter solely buying back their own stock. And since I almost think investors, like they spent $7 billion the past year on buybacks, what if they spent $7 billion on an acquisition? The whole company's worth $63 billion. So that's over 10% of the entire company they've bought back in shares just in the past year. Here's how you can tell they did share buybacks too. Here's the benefit of that. If you go to the net income, it increased 23%. So net income's up 23. Net income per share is up 32. So that's because of the share part of the ratio went down so much. IXRN, what up, dude? Hey, thanks for the cap and the gift there. He said, HAL, this is Halberton. Is this like a hotel? I don't remember what this stock is. That's not good. The stock is the same price that it was back in 1997. So not great, but you get a 2.5% dividend. Looks like the payout ratio is fair, 24% payout ratio. Completion and production. Oh, so yeah, this is an oil and gas stock. So it has nothing to do with hotels. I don't know what I was talking about, but, so that actually this might explain why the stock, has not done too well. Look at these year-over-year declines, on the net income, down negative 90%, negative 30, negative 66, negative 7. So I guess the net income just used to be way higher and way more consistent. So the sales went negative as well, but that's kind of just the whole oil industry. So that's interesting. My personal favorite way to get exposure to oil and gas is actually through MUSA. I actually was just buying more of the stock on the dip. They're also on a dip too. So yeah, MUSA, I like this one specifically because they have such a low dividend. A lot of oil and gas stocks out there kind of suffocate themselves with a high payout ratio, but this company only has a 7% payout ratio and has a 0.5% dividend. I kid you not. This is the reason they've done so well. They have bought back 40% of all the shares that exist just since 2019. Isn't that insane? 40% of the company just since 2019. So I don't know why American education system doesn't teach us. I know that I'd be a fan of that. Some quarters financial literacy basics mandatory class for high school or something. I bought Duolingo, too cheap for their growth. I agree. Duolingo is the risk to reward looks really good to nibble on that stock, not financial advice. Duolingo, that's that language learning app. IFRX. Let's check this one out. IFRX. I have not heard of this company before. So I'd be super careful with this one because if you look in the top right, they're only worth $100 million, $120 million. So that's a very small market cap. And the small market cap companies are just so risky and so volatile. So looks like they sell the sales of Gobic or Viobellimab. It's some sort of therapeutic prescription. And they don't have any sales really. Or the revenue was 39,000 this quarter. Yeah, here's the thing. They lost 14 mil, 9 mil, 5 mil, 20 mil. So just in the past year, they've lost, 30 million plus of net income, and the whole company's worth 120 mil. So they've lost, a big chunk of their market cap. Besides momentum, besides maybe capturing or like some sort of swing trade, short-term day trade, I wouldn't trust this one to just buy and hold for the long run or with that. I don't know. APLD be my next big winners. Yo, APLD is very interesting. Wait, let me pull that one up. APLD. I have to go in a minute here. Wait, APLD, that's in the NVIDIA portfolio. So if we pull up NVIDIA's portfolio, as a lot of people know, CoreWeave is their largest holding, but their second largest holding is APLD. And again, this does basically exactly what a CoreWeave does. They're just on a smaller scale. They, let's see if they got any deals recently. APLD launches. Oh no, that's just issuance. Okay, check out the growth on this one and the how they beat the expectations. So this is a data center hosting company, and check out what they reported versus what the analyst expected. Analysts expected 45 mil of revenue, and they reported 65 mil. And they expected them to lose 13 cents of EPS. They only lost half that. They only lost 7 cents of EPS. So it was a triple beat quarter or double beat quarter. So that's why they gapped up so much on earnings. I still would be careful. They look overvalued here. But remember my father just stock marketing used to invest in Apple, GE. Yo, both of those stocks are at like all-time highs today. GE just did the split off. They finally did their split off. How is the S&P 500? Yeah, actually, since I'm ending the stream here, let's go ahead and give a quick portfolio update. So by the way, I'm going to end the stream here. If you want to hit the follow button, we stream every single day. We might do a live stream later tonight. But yeah, I sell nothing. I have no course, book, what's up. If you want to support me though, the number one way to support me is just hit the follow button and subscribe to my YouTube channel. I'm trying to build on my YouTube channel and my viewers on there. I only get like a couple hundred views a video and I don't get many viewers on YouTube. So best way to support me, I'm trying to build on my channel over there. Just subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. You can just type into YouTube Nathan Robert. Here's our portfolio. The S&P is up 0.2% right now, and we are up 0.2. No way. We're up identically to the S&P 500. That's kind of funny. Here are all the stocks that we own in here. It looks like McDonald's has really led to a lot of the gains today. When tech is down, CoreWeave kind of sent a lot of AI stocks down. These defensive names like McDonald's, Coca-Cola do really good. These are all S&P 500 names. Actually, if you look in the top left, this is called my dividend-only portfolio because every stock in here pays a dividend. But most of these are like dividend growth companies. Here's my total percent change. Only stock we're down on is Carlyle Group. We're down 3.7% on them. So yeah, we earlier year to date, we were down 14% year to date. Now we're green. We also have a Roth IRA. A Roth IRA is just a tax-free retirement account. We started it pretty much exactly a year ago. I'm trying to deposit more into here, but you can't withdraw the money till you're 55. But what's cool is if you're a first-time house buyer, you can use it as a first-time down payment for a house and withdraw it tax-free. If there's medical emergencies, you can withdraw it. But yeah, here's all the stock. It's so all over the place. I definitely got way too many holdings in our Roth IRA. And then, of course, we have our Moomoo portfolio. It's called our buy and never sell account, where once you buy a stock in here, I let you try and never sell it. Yeah, here, look at that. All our stocks are really red on the day, but Coca-Cola Consolidated is up actually new all-time high on this stock right here. Unbelievable performance. If you, they just bought back, I kid you not, 22% of all the shares just 2 days ago. Crazy. So yeah, that's our Moomoo portfolio. And then finally, we have everyone's favorite, our Webull account. If you look in the top left, our open profit and loss, we're only up 18% all time in here. I just love being fully transparent. I go to a bunch of other streams and YouTubers, and they never really share how their portfolio is actually doing. They're open and profit and loss. They're whatever. So anyway, yeah, here's some of our losers in here. We're down bad on UiPath, Sprouts Farmers Market. We have some losers in here we've sold off as well, like ChargePoint. We lost like 2K on them, Zoom, Axon, and yeah, but we do have some winners in here. And sadly, a lot of these winners are like Robinhood, SoFi, Dave. I like regret every share I've ever sold to them. So sometimes the best thing to do is not trim and not sell out of your winners. If CoreWeave hit bottom, should be good. Yeah, they're actually kind of close to all-time lows. So sorry if I missed your stock. If you want to, if you go to my YouTube video, this stream is ending, by the way. If you wanted to replay anything, that stream is permanently on YouTube forever. All my streams are. You can go back. But if you leave a comment on it, I can personally analyze the stock for you. I'll give you a little comment on it. And sometimes if you leave a comment on it, I will analyze it as the very first stock on my next stream, and you can watch it on the rewind. Anyway, see you later. Thanks so much for being here. Have a great rest of your day. See you later. Hey, thanks to everyone on the YouTube channel. Oh no, Lucas. I gotta go. I'm so sorry. Appfolio. We did look at them kind of toward the beginning of the stream, but they were already, hey, help from Uganda. Help me start my journey. Hey, Freddie, I wish I could help you out there, man. I would just look up on Google best brokerages in Uganda. I wish I could help you out there because you need a brokerage to buy stocks on. And then once you get a brokerage to buy stocks on, buy the S&P 500, buy Apple, buy buy stocks that don't stay away from the risky stuff, the meme stocks, just buy stocks you actually know, love, and use that have real good numbers. Microsoft, Google, Meta, Amazon, S&P 500. See you later. I wish I could help you out more there. I'm real sorry there. But that's awesome. You're interested in investing. You're doing your future self a service. So see you guys later. Watch out for people impersonating me. I'll never follow you, DM you. I sell nothing, no course book. If you want to hit the subscribe button, please do. And and if you're still here, hearing me yap, please hit the like button. It still helps me out, even if you haven't hit the like button and now you hit it. Sorry.